Good evening, good evening, good evening. How's everybody doing? Good evening, Shep. What's up, Calvin? How are y'all doing this evening? Today is Sunday, March the 8th, 2026. We are starting a new week in the world. Still got a lot of things going on. If y'all haven't seen, oil going crazy. Gonna get into it. Yeah, man, we living in some volatile times. Hopefully everybody's doing okay. Hopefully everybody had a great, safe weekend. We got a lot going on, man. The airport's going crazy. They're shutting down airports. We got bomb threats. So it's a lot going on in the world right now. But all of this is expected. You know, they drug us into a lot of this stuff. So we're going to get into it. I'm going to definitely get into the markets. We're going to take a close look at oil. I'm going to get some details. We got the stock market coming down. I expect crypto to come down as well. But how's everybody doing? What's up, Ed? Let me set my chat up properly. 1 second. Let me adjust this. 1 second. Okay. But yeah, how's everybody doing, man? Make sure y'all press that like button, subscribe to the channel if you're brand new. Definitely appreciate y'all joining. Let me get a quick roll call. Where's everybody from? Shout out where you're from, city, state, country, region. Let me get a quick roll call. What's up, Mudvayne? Shout out to you, Mudvayne. We got Baton Rouge, Louisiana in the building. Shout out to Baton Rouge, Louisiana. What's up, Shep? We got Idaho in the building. Idaho. Man, that's probably one of the safest places right now, right? Idaho, it's probably real safe up there. Out the way. What's up, Ed? We got the Bay Area, California in the building. Bay Area, California. Let's go to some of these places on the map. I'm gonna get to the markets here in a second. I'm gonna let a few people join. But let's see, man. Let's look at the United States right quick. Let's come up here to Idaho, man. What's going on in Idaho, man? Let's zoom in on the state of Idaho. I've never been to Idaho, man. What part of Idaho? Are we talking about North Idaho, South Idaho? Never been to Idaho. Terrain almost looks like Iran. You know what I'm saying? Looks like kind of like Iran a little bit. We got the California in the building. Yeah, everyone in the cities need to be aware, be safe. Yep. We got the Bay Area, California in the building. Let's go out to the Bay Area. Let's go out to the Bay Area. The Bay Area, San Francisco, Oakland. San Francisco, Oakland, hopefully Silicon Valley, man. What's the price difference? Now, so what's the difference between Oakland and San Francisco? I'm sure there's a great affordability price difference, right? I'm sure it's a different affordability. I'm sure San Fran is probably ridiculous, probably unaffordable, and you know, you might get a little bit of cheaper discount in Oakland unless it's becoming San Fran 2.0. Victor, you said it's cheaper? I bet. I bet, man. I bet. But shout out to everybody, man. Shout out to everybody. Shout out to everybody. Say crime is high? Yeah, we know, man. We know why crime is high. We ain't got to say it. We know why the crime is high. We know the crime is high. Over here in this part of the world, man, Tehran, you know what I'm saying? Like, look at the Gulf states, right? Look at the Gulf states. Got Kuwait over here on this part of the Gulf, pretty much all desert, and when we get over here in Iran, it's pretty much mountainous. So that's drastic difference. That's pretty amazing. And it's going down over there right now, man. It's going down. Let's go over to X. Let's get some X things out the way, and I'm gonna get into the charts. We're gonna get into oil. Gonna get into some headlines. Gonna get into oil. Gonna get into some headlines. So, what's been going on? So, whenever I want to see what's going on currently, I want to come over here to X. You know, as y'all know, oil and gas prices rapidly rise as Iran war shows no signs of letting up. Now, it's only been a week, going into 2 weeks, and you already can see, man, your local oil, I'm sure, is going crazy. What's up, Texas Plates? I believe where I'm at, it's up to like 315-ish, 320-ish. It's only going higher. I believe oil is going past $200 per barrel. We're about to get that, right? We're about to get $200 per barrel oil. We're gonna get that real soon. So be on the lookout for that. The CI building in Kuwait, allegedly. I can't confirm nor deny, but this is what they're saying. The CIA building in Kuwait. Let me play the video. One second, y'all. 1 second. I have no audio. Excuse me, I have no audio. I don't know what's going on. Let me play this right quick.
Just like
okay, yeah, there's no audio to that video, but this is the CIA building in Kuwait. This is what they're saying it looks like. So yeah, they're bombing the CIA building in Kuwait. Israel. This is footage from Israel. Footage from Israel. Let's play it.
This is what you get for all your evil deeds. Boom, 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 Tel Aviv. You brought this upon yourself. It's your time.
So yeah, man, it's going down in a lot of places. They're blowing up oil refineries. I think a lot of stuff, like if Iran is attacking Israel, I think it's being shadow banned. They're not really getting that out as much as we see Iran getting hit. Satellite images of the U.S. base established in Kuwait after the Iranian attack. This is the news. This news has brought you peace, I guess, whatever. So this is satellite images from Kuwait, from the U.S. bases. You know, that's crazy, isn't it? That's crazy. So, hey, while a lot of people been sleeping, you know, people been stacking gold. Could y'all imagine having this amount of gold? Wouldn't you wish to have this amount of gold right now? How much y'all think that is? Yeah, man. People moving different out here. So right now they're saying spring break is under siege. The Democrats' DHS shutdown has led to hours-long security lines. Anybody been to the airport today? Anybody been to the airport recently? Anybody at the airport now? But they saying the security lines at airports across the country are leading to probably millions of Americans missing flights or whatever. And I don't think it's due to spring break. I think it's something else going on. It's not random that we got these global conflicts and the airports are starting to shut down. We're starting to hear about bomb threats, all that. We're going to get into it. We got stuff going on in New York. Assassination attempt on New York's mayor. You know what I'm saying? New York City's mayor. That happened, I guess, yesterday. So it was an assassination attempt. Two suspects placing a bomb outside of a resident's house. Here we go. You know what I'm saying? This is crazy. Looks like an explosive device.
Stop moving! Okay, clear the pin! Clear the pool!
What's up, Daryl?
That's it! Move back! Let's go!
Right now.
Fuck off. Yeah, so we got suspects out here attempting to assassinate mayors. Let's see. Iran just bombed the shit out of a U.S. soldiers' hotel in UAE. Let's play this. What's up, Dusty? Yeah, that's going on in Iran, man. Let's see what else is going on. Long queues at gas stations in Spain amid growing concerns about raising oil prices. So we got long lines in Spain. So the oil prices worldwide are going they're skyrocketing. Again, massive delays at airports across the United States caused by Israel. That's what there's. I don't think it's caused by Israel, but you already know. Yeah. Oh, can't show that. That's graphic. U.S. defense officials have said that there are roughly 40,000 U.S. troops in the Middle East. That's up from 34,000 typically in the region. So they're deploying more troops over there, boots on ground. U.S. started deploying soldiers to the Middle East. The deployment takes 1 month to deploy 100,000 soldiers in the Gulf. So this is footage of people getting deployed with their family members.
Get him out of there.
Got men breaking down. So yeah, man. Soldiers being deployed to Kuwait. So yeah, you know, tensions are going to be ramping up, man. Trump said it on national TVs. There will be soldiers that will lose their life, you know. Let's see what this guy got to say.
Trump has lost his fucking mind. He announced today that he wants an unconditional surrender from Iran. That's fucking retarded. The last time the U.S. achieved an unconditional surrender, 1947. It cost an ocean of American blood, and a hydrogen bomb and a fusion bomb dropped on Japan. That was the last time we ever got an unconditional surrender. You know how fucking possible that is with Iran? How about 1990 never going to fucking happen? This is off the fucking rails. Pete Hegseth is now saying that we got to switch to gravity weapon systems. Why? Because we have run out of standoff munitions. Those would be like cruise missiles, tomahawks, everything we shoot from a fucking distance from like the warships, right? Into Iran, we don't have any more of those left. And that's obvious because Ukraine has now come out and said that the U.S. is begging for weapons back. Not only from them, but South Korea as well. And South Korea is like, go fuck yourself. We're not giving this shit back. So now we're going to go to JDAMs dropped from fucking planes onto what? Fucking painted jets. Iran just fucking spoofed the fuck out of everybody. They painted jets and helicopters onto their runways, and we spent a fuckload of cruise missiles blowing up pictures of jets on the ground, right? And our intelligence is garbage. And you can tell this because we blew up. America fucking killed all those fucking kids in that elementary school. That says two things. It's one of two things. Either we don't give a fuck and they're trying to fucking enrage the Iranian people by killing their kids, or our intelligence is absolute trash and we weren't aware that that was an elementary school. That means we're getting fucking played. And that would be kind of obvious because if you're blowing up fake fucking jets and fake fucking helicopters, and it's from our own fucking video feeds, so don't try to say that's fucking fake news. That's real fucking news, right? Iran for 20 years has been waiting for this war. They have stuck everything underground. We can't hit shit. Last night, Iran broke out their hypersonics, spanked Israel so fucking hard, and Iran is hitting everything right on the fucking titties because Russia has been waiting for this day forever. Russia and China are over there feeding satellite information and targeting information to Iran. So Iran is hitting everything. right on the fucking head. They're now hitting the shelters. They're bombing the shelters in Israel. This is about to become so painful for Israel because the Iron Dome's completely fucking failed. They're either getting around it or the weapons are too fast. That hypersonic missile, that one that Iran shot 6,000 miles per hour. There's video of it coming in like a fucking streak from God, just obliterates Ben Gurion Airport, hits their fucking Air Force base. This is, I don't know in what world Trump thinks he's going to get an unconditional surrender out of him. Iran said, come and take it. Iran said, come and take it. Like, this is, and the second and third, fourth order, oil is at $90 a barrel. $90 a barrel now. Some say if the Straits of Hormuz don't get opened up, that it's going to hit $200 a barrel. Russia loves this, right? Because Russia sells oil. All Russia and China have to do now is just sit back and wait for the United States to run out of fucking ammo, right? Because that's what's happening here. We're running out of missiles. We can't build them. You can't just throw money and just have fucking like missiles come out the other end. It doesn't work that way. Months and years to build this shit, right? Like there's no army to invade Iran with. They said today, like if they even wanted to mobilize one armored division, 9 months. 9 months it would take them to get an armored division even to Iran. So that's fucking not fucking happening. The best thing Trump could do here is just declare victory and walk away. But it's not possible. It's not possible because Trump is so owned by Israel. And the moment we do that, Iran is going to grind Israel into the dust. People warned that this could be the end of Israel. Maybe, like, if everybody wants to be like, oh, he's playing chess, and like, wow, if this is the end of Israel, but it's going to come at a cost that is so ungodly, and then Israel's just going to Samson option them. And I don't know how much longer Israel can hold out before they just launch nukes at them. And once that happens, the rocket man Kim Jong-un, he rolled out nuclear missiles last night in a fucking parade and was like, if Israel breaks out nukes, we're nuking Israel. So there it is right there, people. And like China, they can go take Taiwan at any minute because they were sitting there and they've watched and learned from Iran how to defeat our interceptor missile systems, right? They've been helping them and they've already defeated the interceptor missiles. Like it's not that we just ran out, it's that they defeated them. There's plenty of videos out there of us shooting fucking 5, 6, 10 interceptor missiles up at an incoming fucking missile, and the Iranian missile evades it. Just evades it. Like juke and jive, fucking flares come off it. This is a total fucking shit show. This is a worst possible scenario. Trump is destroying himself, and he is taking down the American economy with it. Prepare yourselves, because this is going to go nowhere good. Nowhere good. They've been trying to fucking talk a president into this for years. What do they have on him? I don't think blackmail's enough, right? It's got to be like reptilians and fucking skin masks and they just peel them off. Because the threat can't be like, we're going to destroy you in your public image and we're going to release these images of you fucking kids. Like, he's destroying his public image already. So the threat can't be destruction of your public image if that is what you want them to do. None of this makes sense. Everything is so the fuck out of control. The Great Noticing's on fire. Like, that's why Israel has to do this, because Israel is going to be decoupled from the United States here. This will not continue. Public outrage is building to a place where that's not going to go anywhere well. Like, this is going to a place that no one even quite understands yet because we haven't seen the economic impacts. Economists are saying this is going to be far worse than 2008 because it's just inflation, oil prices, energy prices. This is a complete clusterfuck. Worst case scenario. Not happy about it.
Yeah, man. I don't see any good coming from this. I don't see any good coming from this. Welcome everybody. Appreciate y'all joining. If you just joining, just going over some headlines, going over some perspectives. Let's come look at the oil chart. All right, let's come look at the oil chart. Raymond, Psyops, yeah. What's up, Dusty? What's up, Daryl? What's up, Texas Place? Everybody joining. Appreciate y'all joining, right? So, this is let me go down to the monthly. All right, go down to the weekly. So, look at these gaps on oil, right? Look at these gaps. This is a weekly chart, right? We're in the second week of March. Oil 108. 108. I think when I last went live, right? When I last did my live stream, just go back yesterday, over the weekend when the market was closed. When I go out to the daily chart for oil, what time frame was it? Was it the daily or was it the monthly? 1 second. It was one of these time frames. Weekly. Okay, right there, weekly. So when I go to the weekly time frame, right, I look all the way over to the left. We can go all the way back to about 2022. June 2022. There was a fair value gap. I'm gonna highlight that. Right here. It's a SIBI, right? Sell side imbalance, buy side inefficiency. I can drag that all the way out to the right. Boom, just like that. Not random at all, but we gapped open so far today. We trade directly inside of that gap. Boom, just like that. Oil trading at 108. It just recently made a high of 111, right? Very volatile. Smart money, the market makers, right? They've been in this market for a few months now. They've been already had their position. So if you're somebody trying to speculate on oil right now, you missed it. You missed the move. And this is all manual intervention. Look at these gaps on oil. So last week, right? Last week it gapped open. So it closes on Friday, right? The market for oil, the futures market, it closes on Friday, opens up on Monday or Sunday, and we gapped open. Same thing here. Close on Friday, gap open on Sunday. How wide is that gap as far as points? And this right here, when you see the market doing this right here, extreme volatility in the market. That gap, how wide is that? Okay, let me pull up the futures contract. This is the overall contract. I'm gonna pull up the futures contract for oil. Futures. Here we go, right here. All right, oil futures, right? Oil futures. Go down to the daily. Go over on the daily. Get the weekly. Right there. Okay. Weekly contract for oil. How's everybody doing, man? What are y'all concerns? Are y'all concerned about any market? If you're concerned about any market, let me know. We can get into it. But on the futures contract for oil, we trade right up into that SIBI, the lower end of it. And yeah, that's where we're trading at. Boom, barely tapping. Y'all think that's random? No, it's not random. Then we reject. 1 second. Wait a minute. Press 1 if you can hear me. I'm losing my audio. Press 1 if you can hear me. Okay, appreciate it, Darren. Appreciate it. Okay. So yeah, we trade up into that, boom, just like that. And that's where we're at right now, oil. So I'm already expecting, okay? I'm expecting oil. So last week, right, we closed right here. And we gapped open and took out this high right here, this old liquidity pool right there. See, just gap open, take it out. Oil very volatile. I would not be like, if I was trade, I don't trade oil, but if I did trade oil, I wouldn't be trading it right now because it's too volatile. There's no way you can be in front of this. So I'm expecting the oil to come up and seek these levels up here. See these highs? I'm expecting it to come up and seek those levels because they left behind liquidity up above these highs back in 2022. And that high right there, that's around $130 per barrel of oil. 130 for oil. So I definitely can see us getting there very quickly as long as this conflict in the Middle East keeps escalating, which I think it's a long game. Just like the gentleman I just played right before I went to the charts. He just ran through like, hey man, like this shit is very costly. You know, just to deploy troops on the ground is gonna be costly. We're running through ammunition and munitions, and it's not cheap to replenish that stuff. It takes time to replenish that stuff. So I don't know where this leads us. Well, and I'm gonna go. I think we have started World War III. I'm just not even. There's no way. There's no other way to put it. We have started World War III. We're in the early stages of it though, because other nations haven't got involved yet, like China's and Russia. But we're in the early stages, and I don't know what our game plan is. I think we're kind of vulnerable. I'm not even gonna lie. Us United States citizens, I think we're vulnerable. And I think that's by design, by the way. You know what I'm saying? I know we got the strongest military in the world, but I mean, we can't fight multiple fronts at the same time, right? We can't fight Iran and then expect to defend off of China. We can't fight China and be fighting Iran and dealing with Russia. We can't do that in all these fronts. And then our allies, you know, they're friends, but then until they're not friends. So it's like, it's a game of chess, man. Do you really think do you really think if the shoe was on the other foot with a France or the Britain, if they had the power that the United States would have, you know what I'm saying? It'll probably be a different game. So they're probably praying on our downfall at some point. Who knows? Who knows? But that's oil, man. And let's take a closer look. Let's go down to the daily. See, that's just one candle, man. That's just one candle. And we didn't even start the day. Monday isn't technically open yet. The Monday market opens at, I believe, 8:30, 9:30. So we already gapped open a wide range for oil on the daily candle. Let's go down to a 4-hour. Yep. So whenever you see something like this, right? Whenever you see a gap in price where it closes on Friday and it gaps open on Monday or Sunday, what you want to do is you want to take a Fibonacci and you want to get that range from this candle's close up to that candle's open, just like that. I want to get that range right there. And price could refer back to this, but it's too volatile. I wouldn't play with it. Let's go down to a 5-minute. This is what price looks like on a 5-minute. So it's just consolidating right now. I would not be touching this. I would not be touching this. Created a BISI, buy side imbalance, sell side inefficiency. Very volatile, man. Expect more gas prices to be higher. You know what I'm saying? Gas prices to be more higher going into the week. Going into the week. We got a lot of scares going on as well, like bomb threats at the airports. Let me see what else we got. Bomb threats at the airports. Americans are missing their flights because the department shut down. The DHS, the TSA, their officers. There's a shortage with TSA officers. Something about they're working without pay, and it's leading to financial hardship, absences, and crippling staffing shortages. And that's putting a bottleneck on the airport. So that's leaving people vulnerable. In Kansas City, right? Kansas City International Airport currently on lockdown. I'm sure this was 6 hours ago, but this was earlier today. FBI on site due to a security incident. So let's see what they had to say.
Okay, guys, this is breaking right now. Apparently, Kansas City International Airport is currently experiencing a major security incident as of this afternoon, March 8th of 2026, around 1 to 5 p.m. local time based on real-time reporting. There's been multiple eyewitness accounts and breaking posts all over the internet right now. They're saying staff are being evacuated as well as passengers from concourses and terminals onto the tarmac or other areas. Sections of the airport, including parts of Terminal A and possibly others, have been cleared with people directed to specific locations. No vehicles allowed in drop-off zones, and K9 units visibly on scene all over the airport. The Kansas City Aviation Department confirmed that they are aware of the situation at KCI, with airport police and FBI on site investigating a potential threat. Now, this has led to a partial or a full evacuation of affected areas, a ground stop, including no takeoffs or landings in progress, and suspension of normal operations in those sections. Travelers are currently being instructed to exit or relocate as directed, though details on a complete lockdown or full airport-wide closure vary from source to source. Now, there's no official statement as of what the threat is yet, and it's too early for confirmation of any type of resolution or all clear. But as this thing develops, I'll keep you guys updated.
So yeah, man, that's the update with that. I don't know if that was resolved.
Okay, guys.
I don't know what's going on with that, but it's a lot going on, man. It's a lot going on. We got assassination attempts of mayors. There's a lot going on. So just keep your heads and eyes peeled for the week. You know what I'm saying? I'm sure it's not done. We're not done for the week. So let's come over here to the NASDAQ, right? We're starting a new week. Let's get into the technical stuff. Let's get into the technical analysis. So, all right, this is my primary market, right? This is the NASDAQ. On the left, I got the higher time frame, which is the daily. Let me show you what happened in the NASDAQ, right? So we had another gap down, just like oil gapped up. We got a gap down in the NASDAQ. And it's not even, the day hasn't even began yet. So we are taking out some significant levels. And the conflict overseas is the reason why these markets are coming down. The simple fact that oil, right, the oil prices are going up could be a reflection of why this market wants to come down. Okay, because energy prices are high, right? So if energy prices are high, that's going to put a strain on the economy. Transportation of goods and services, right? Your grocery stores, the foods that you get. You know what I'm saying? Supplies. Let's say you run a business, you need supplies. Well, the rising cost of shipping shit around is straining the economy that was already crippled. The economy is already fractured, right? So that is showing in this market right here where we're coming down. And I was expecting this last week, but guess what? It does it at the market open. You see that large gap right there? Let me measure that gap. Closing price to the open. It's about 170 point gap. So we gap down and it's taking out major liquidity, and we're about to take out the lows that they left behind since November. Where do I think this is going to go? Where could the stock market go, right, for the NASDAQ? Well, look down here. You see these lows in the market? Old lows, right? Relative equal lows. I think the NASDAQ can come down to these levels. Now, how long do they want to play this psychotic game of World War III? How long do they want to play this psychotic game of playing chess in World War III with us? This is going to put strain on the economy. Previous week's low. 1 second. Previous week's low. Right there. So I think NASDAQ could come down to this low right here because why? There's equal lows. They left behind a lot of liquidity, which that's where they have pending orders at. So this could get crazy. You know what I'm saying? We can blow through those lows and come even lower. But that's what I'm watching, currently observing the situation. Let's go down to a lower time frame. Let's go down to a 15-minute. On the 15-minute time frame, right? You see the gap in price? This momentum started last week. And if you in my Discord, we already know. We've been expecting this. But this momentum, it has started last week. And we were shorting the market. If you listen to what I've said, especially if you're in my Discord or whatever, I've been saying I'm primarily bearish. I'm primarily bearish. I don't care about any longs. I'm only looking for shorts. And here we are. Boom. Gap down just like that. We have something called a new week opening gap. So what is a new week opening gap? This is where y'all learn. If you're trying to trade futures, who trying to trade futures in here? Press 1. Who's trying to trade futures, or who's trying to learn how to trade futures? If you're not trying to trade futures, press 2. I want to get some sentiment in here. I want to get some sentiment. Who wants to learn? If you're already trading futures, then you ain't got to respond. But if you haven't, if you're trying to learn how to trade futures, press 1. If you don't care about it, press 2. If you're just somebody who's a long-term investor and just likes to like listen to, you know, analysis and people analyze the market, press 2. Let me clone that. All right, Shep, Daryl, Ed, Lenny, Dusty, futures. Okay, so since y'all press 1 and y'all want to learn how to trade futures, right? Pull out your pen and paper. Some of y'all already know what this is. I think Lenny, you already know. So every week, right? Every week until we go full blown 24/7 trading, which we're not there yet in the traditional markets. Every week on Friday, right? you want to highlight the closing price. You want to highlight the closing price on Friday. That's every week. Every week on Friday, get the closing price because it's going to be relevant when we open up on Sunday. So right here, I'm highlighting the closing price. Right? I'm going to configure it or calibrate it. You want to get the price. So you go right here, put your cursor on the candle. You can put your cursor on the candle and you can press down and hold whatever candle you want to look at, right? And when you see where it says close, you want to get that number. It says 246670.75, right? So what I'm gonna do is I'm gonna calibrate this trend line right here, 246670. Wait. Come on. 660.75. Okay, 660.75. So whenever you get that price, right, for the closing price on Friday, you want to get the exact price. You want to come to coordinates in your trend line settings, and you're going to plug that in. I already got it plugged in, right? And then, okay, the market is going to open up on Sunday. So we just opened up on Sunday around 6 o'clock p.m. Sunday, every Sunday, and you're going to get the opening price. And you're going to get the exact price, which for this candle would be 24,500. And then I'm gonna go to this trend line and I'm gonna put in 24,500. There it is right there. And then once you find that, you're gonna want to find the midpoint of this gap right here. You're gonna find the midpoint, drag it down. And all I'm gonna do is take a trend line. I'm gonna clone it. I'm gonna lay it right there at the middle of that gap right there. Boom, just like that. And this is for the NASDAQ if y'all are just joining. You can do this in any futures market. All the futures markets do the same thing. I might do it in oil. So right there, boom. So we calibrate that. And then once I remove this Fibonacci, now we got a gap, right? Kind of like a fair value gap. But this gap is called a new week opening gap. NWOG. 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 New week opening gap, right? This gap is significant. It's real significant because price can refer back to this at a later time. Okay, so you want to highlight that. That's your gap. I'm on a 15-minute time frame. Anytime price trades back to this gap, right, that weekly candle starts to disappear. So keep that in mind. That's significant. So we've opened up, we traded lower, right, and we're attacking the liquidity that they left behind for weeks and months. Like this old low back here. This old low is from February the 26th. February the 5th. And the low just below it right here, that's from November. That's a significant long-term level, and we're reaching for it right now. That's not a good sign for the economy, but smart money, look, smart money, they had their positions in up here. I'm gonna show you where smart money, the market makers, they had their positions in up here. So watch this. If I go out to like a 4 hour, and this is the type of game they play, right? This is the type of game they play. So check this out. When the market runs higher, right? It rallies higher. Look to the left. Let's play the participation game. Look over to the left. It runs up higher right here. This was back in February the 25th, right? And it runs higher. Look over to the left. What is this in the chat? What kind of levels are these in the chat? These old highs in the market. What do we call those? Yes, Dusty, liquidity, right? They did this back in February, right? The 25th of February. They run the market higher, right? And they take out the liquidity. They take out the liquidity. And when they ran it up and took out the liquidity, they offloaded long positions and they accumulated to their short position, right? They accumulated to their short positions. So ever since then, they've been in this sell-off, right? They've been in the market since up here, February the 25th. We're currently in March. We're currently March the 9th. It's currently March the 9th. They've been in since February. In the market, they've been holding their positions all this whole time. They've been accumulating more and adding more to the position. So when we drop down lower, they run it back up and they trade to this SIBI. So what they're doing is they're adding more orders to their selling positions because they can't put all their orders in the market at one time because they're dealing with billions and billions and billions of dollars, right? So they're not dumping all their orders in at once. So they gotta accumulate in stages. So this is one stage where they accumulate shorts. They drop it down, they come back up, accumulate again in another short. And then they drop it down, and then here it is. They close the market on Friday, right? And then they gap it open. They don't give us a chance right there. If you wasn't in the market up here in a premium level, they're gapping it down. Here it is on Sunday before the market opens on Monday, and it's already ran 300 and something plus 330 plus points, right, in the NASDAQ overnight. The run from up here when they got in their positions up here down to where it's at now, that's about 1,300 points in the NASDAQ. That is very, and when we're talking about billions and billions of dollars, I don't think y'all understand how significant. Just Friday, $800 billion was wiped out of the stock market. We're talking about one of the largest markets on the planet, the NASDAQ, and they're moving billions and billions in this market, and they dropped it 1,300 points since February the 25th. So it's coming lower, right? It's coming lower. It's already took out liquidity. Price always seeks liquidity. Y'all know that, right? It's always reaching and seeking for liquidity. Lenny say 23K incoming. Oh yeah, it's coming, Lenny. It's coming. I got it down here. Look. Yeah, 23K. Yep, 23K. So they're moving institutional capital. They're moving large amounts of capital, pushing it lower and lower. Okay, let's look back. They've been in even before that though. You thought they just got in right there. No, let's go a little bit further back. Right? So when I zoom out, same concept. So you see how they run it up? This was back in January, top of the year. So if you don't think they've been in this market since January, the top of the year, I don't know what to tell you. But look, they run the market up higher. Look to the left. See these highs in here? See all these highs in here, right? Again, what kind of highs are these? What kind of highs are these in the market? What kind of highs are those in the market? They've been in these positions since January. Yeah, I caught it, Lenny. I caught it. Follow the profit. Shout out to you, man. Yes. Liquidity, buy side liquidity. So they've been putting their positions on since January. They offload they went long, right? Look, they drop it down, take out sell side liquidity. Look at these lows in here, right? I'm just showing you how the market makers move these markets. Look how they drop it down. They take out sell side liquidity, right? They accumulate under these lows and they buy it and they run it up to stage the event. They already knew, trust me, they already knew they was going to war. They knew they was going to war probably years ago, but let's just say they knew they was going to war in January. They knew at the end of the third quarter, we're going to make a move. Nearing the end of the third quarter of 2026, we're going to make a move on the Middle East, right? So they run it up to stage their orders prior to the sell-off. So they're staged in January. About the end of January, they stage their positions and they hold their positions for months. And let me zoom out, right? From up here, just draw a simple trend line down to where they at now, right there. They've been in those positions, and guess what? We're about to hit a low resistance liquidity run, right? What does that mean? What we're seeing now? A low resistance liquidity run is when these markets start just running fast, speed, gapping, and they're going to attack these lows down here, and it's going to happen fast, and it's going to be pain in the economy. Well, that's going to be the narrative, and you're starting to see oil prices. Some people ain't going to be able to afford to go to work. People was already struggling to get by, but now let's say you're somebody who has to commute 30 minutes to an hour to work every day. They're taxing your ass at the fucking pumps. You know what I'm saying? They hitting you at the pumps. It's like a hidden tax. Motherfucker, we didn't ask to go to war. Everything was sweet until we dropped them bombs, right? But now it ain't sweet because they shutting down the Strait of Hormuz. Inflation is kicking in because we got a strong dollar. So anytime the dollar goes up, they're printing money. The printer is on. The money printer is on. They cut the printer on. So they're printing money in the economy. They got to print money to create the bombs, right? Money just don't grow on trees and be like, hey, let's just keep making bombs. No, they got to cut the money printer on. So that's why you see the dollar get risk on. Excuse me. The dollar is a risk off environment, meaning the dollar is going strong. It's gaining strength. Oil is rich as the petrodollar. You're starting to see the petrodollar kick in, where a spark, somebody lit the flame underneath the oil, and that right there is creating chaos, right? So that petrodollar is in full swing. So when you got a risk off environment where the dollar's going higher, you got oil going higher, that's putting strain on the economy. So that's going to make people have to sell their stocks, have to sell their crypto. You're getting taxed all kind of ways. Inflation going higher. All these things are starting to spiral out of control. And that's why you see the stock market reflecting what it's looking like right now. That's why the stock market is starting to reflect. It's starting to lose. It's starting to slip. Right? And here we are. You see this low right here that we're about to take out? It says November 24th, 2025. I've had this level, right? I've had this level marked out on my chart since November. You might not believe it, but this level has been marked out on my chart since November, and here we are reaching forward. So when they say you can't predict price, well, they lied to you. I'm gonna say that they lied to you when they say you can't predict price. Your whole job, you're gonna end up doing this skill, trying to learn this. Your whole job is trying to learn how to predict price, right? You're trying to forecast price. You're trying to predict it. And look, are we gonna get that key level? Are we gonna hit the boom? There we go, just like that. Man, that's been a long time coming. That's been a long time coming. Really long time coming, and we just blew through it. Look at the volatility, man. That's a significant level right there. Let's go back out to the daily time frame, right? That low right there. And Lenny, we just broke that range, man. We finally broke the range. We've been in my Discord all these months, waiting. We've been in my Discord all these months, waiting for a price to come down to these levels. And here we are. We finally broke that low right there. Man, now is it done? This the key thing. Does it start running? Get ready. Does it start running, right? Does it start going low resistance and going crazy? Look how long. Let's count the days, right? Let's count the days since that low right there. So what I'm going to do is I'm going to take a ruler. I'm going to place it on the current candle. I'm just going to go left. How many days has it been? It's been 108 days since we created that low back in November 2025. 108 days. So y'all might not believe it. But yeah, I've had that level on my charts for 108 days. And now we're just trading through it. Now, what's the next level? I like all of these lows down here in the market. And it's gonna, this right here is telling me we about to have some pain this week. Hopefully everything, I don't know, man. I don't know what to say, man. Hopefully things stay stable. Hopefully we don't have no mass casualty events. I hate to think dark. Don't think I'm a dark person. I'm not, but this is what they want, man. This is what they want, bro. They being exposed, so this is what they want. You know what I'm saying? All the shit that's coming out in the world. This is what they want. We going to make money this week. Yeah. Yep. Lenny, I wish I was in this, but at this point, Lenny, I can't chase it. I got to let it go. I need a premium. They got to offer me a premium. And look, this is what we was expecting Thursday and Friday of last week, but they kept stalling it out. And then here we are at the open. They dropped it 300, almost 400 points. So that they're telling you this shit is reserved for them. It's reserved for them. And all we can do is get in, ride the coattails, and get our little portion of the meal. That's all we can do. Make sure y'all smash that like button, subscribe. Let's go look at the S&P. Because if the Dow Jones is running, I know the S&P is running. Let's go look at the S&P 500. Right here, ES. Look at ES, right? Again, ES. Already trading lower. What's up, TZ? Already trading lower. Guess where it's headed? These lows right here. Right there. And again, that's the November low from the S&P. So, okay, this is the difference between the S&P 500 and the NASDAQ, right? So the S&P 500 rallied higher and took out previous all-time high. It took it out twice. It took it out right there. It took it out right there, and then it came up again, and it took it out right there again, up here at this high right here. But the NASDAQ failed. The NASDAQ failed to take out its all-time high. And the NASDAQ ran and took out the most recent low from November. And the S&P hasn't done it yet. So look at that divergence right there. The NASDAQ failed to make a higher high, right? But the NASDAQ already created a lower low. What do I mean? Let me show you. Let me pull it up side by side. Go out to a daily. So if we look at the NASDAQ and the S&P, right? If we look at the NASDAQ and the S&P, see this high right here from the NASDAQ? I'm gonna highlight it. It didn't want to come up and take out the all-time high, right? Compared to the S&P. Wait. Yeah, we got that low right there coming inbound. We got that low coming. But yeah, this is what I mean. Like, we didn't want to come up, take out the higher high, but the S&P went up and took out its higher high. Yep, 23,900. 23,900 for the S&P. I mean the NASDAQ inbound. And the S&P, same thing. So they're kind of running similar, but the NASDAQ just didn't take out its buy side. But the S&P did. So both are coming down lower, right? Both are pretty much trading lower. We're coming down, and we're looking to take out this liquidity below the market, right? So that's what I'm aiming for the S&P 500. Let's look at the Dow Jones. Let's go look at the Dow. Go out to the daily. The Dow Jones looking very heavy. The Dow Jones took out its previous all-time high right here. So the Dow Jones, the S&P 500 both took out their previous all-time high. And the NASDAQ failed to do it, but all three of them are rolling over. All three major indexes rolling over. And I can see the NASDAQ, the Dow Jones looking to take out these lows in here because they're relatively equal. So I can see them aiming for those lows, right? So that's that. Let me come back to the NASDAQ, right? Let's come back to the NASDAQ. We just took out that low. Now we got a new range, y'all. We created a new range for y'all in my Discord. We created a new dealing range. So let me count the past 20 trading days. You start on the current candle, right? Start on the current candle. You count 20 trading days. Right there. And that's the current range that we're in. And we just took out a significant low. So the low isn't in yet, y'all. The low isn't in. So I'm waiting for the new range to form. We're waiting for a new range to form. Let's look at the economic calendar for the week. So on the economic calendar, right, we got daylight savings today. There's no news on Monday. There's no news on Tuesday. So y'all in the chat, if you're familiar with what I do, if you see news, no news on Monday and Tuesday, and you already know on the chart, we just took out a significant level. What should you expect going on Monday and Tuesday? If you was a trader, what should you expect to go into the market on Monday and Tuesday? What should you expect? There's no news, Dusty, no news Monday and Tuesday on the economic calendar. And here we are on Sunday, and we already ran a significant distance from the opening, and they took out key high time frame levels. What should we expect going into Monday? Consolidation, Lenny, TZ consolidation. By them doing that, Lenny and TZ, I would not trade tomorrow. I'm not trading because I've been bearish this whole time, right? Unless they on intraday, they offer me some type of premium range. So they create me a range, offer me a premium. I'm not touching it because they already ran out key levels. They just ran out some key levels on that daily time frame. And they did it on Sunday. So I'm gonna be observing. I'm observing, right? I'm switching from trying to be aggressive because guess what? I wanted to get in up here. And this is what I mean, y'all, when they not letting us hold positions. There was a time where you could hold a position overnight and the margins wouldn't get you and the volatility wouldn't get you. But when they ran it up a few days ago, you know, back on February, the end of February, and they were this range right here. They ran up to the premium, took out these highs right here. And we could have positioned ourselves. A lot of us, we caught the trade on this day right here. Thursday, February 26th. We caught the sell-off, right? That was a good selling day. And then the next day, which was a Friday, was a dud. It didn't really do much, right? And then we could not sit through all of this consolidation the following week, all this back and forth. Imagine being able to put your position on and sitting and holding this for a few weeks. Now, you could have done it, but the volatility was so horrible, right? You know, if you didn't get in up here, if you didn't position your trade in up here at the buy side, right, near the top of this range, then if you got in down here, all in this, you would not be able to sit through the volatility and the swings in the market. It'll put you in the red, and it'll hurt you, make your chest hurt, put some hair on your chest. You know what I'm saying? So sitting through all of this in here, it would have been difficult. And then guess what? It finally rolls over. But we would have had to look. We would have had to wait. Let me see. We would have had to wait probably 12 days. You know what I'm saying? Imagine sitting in a trade for 12 days. It would have been hard to do. Unless you use very low risk. Let's say you use one micro contract, right? And you put it on and you sit through it over weekends, almost 2 weeks. And then it finally rolls over and hit your target. But if you're somebody who's trading with a lot of size and a lot of equity, that's hard to do. We can't do that. Yep. So the chop would have definitely got you. It would have put you in drawdown. It'll make you panic. It'll make you shit your draws, man. It'll make you shit your draws. So, or your underwear. So yeah, man, that was that. The move is over for me to get short unless we kind of retract up and come back into this new week opening gap. Let's go down to a 15-minute. I'm in observation mode. I'm not even trying to engage this right now. I'm just pure observation mode. These markers are very volatile. So whenever the markers are very volatile, you got to preserve your capital, right? You got to preserve your capital. You don't want to just get in here and do anything. You got to preservation of capital. Even for y'all in crypto, preserve your capital. Because right now it's go time, right? It's go time. They're not playing. So we took out that low right there. Let's go down to let me draw down to a 1 minute. 1 minute. You could took a quick scout. Watch this, 15 seconds. Took out liquidity. Now we're running up. Is that random though? We took out that level. Now we're starting to run up. What y'all think about it? Is that not algorithmic? Is that not algorithmic or not? I like these highs right here. This is a 15-second chart, by the way. I'm just getting some intraday reading. 15-second chart right there. We got relative equal highs. I want to see it trade up into that. Go down to a 5-second. 5-second time frame, trade down, suspension gap, order block. Let's see if it trades higher. Blew right through that. Maybe I need to zoom out. 15 seconds. 15-second time frame. We got a SIBI right here, or a BISI. Trades down into it. What time is it? 8:36 p.m. Eastern Standard Time. Blew through that. All right, let me go out to 30 second. Very volatile, very volatile. Go out to a 1 minute. 1 minute BISI. Yeah, this is still coming down. It ain't done, y'all. It ain't done. So what I'm looking at, check this out. This range. This high down to that low right there. Right? Dillon range. Right? Are we in the premium or discount? Where are we at? Premium or discount? Premium or discount? On the discount side, we just traded down into this BISI right here. Looks like it reacted from the SIBI on the 15-second. Let me look at the daily. One second. So now it's pretty much trading near equilibrium inside of that range. So I think it continues to come down. I think it's not done. Over here on the right side of my screen, that's a daily. That. I don't think it's done. It's very bearish. I don't think it's done. But you see how it's trading near equilibrium, and it's trading, look, it's not random. Look, on the premium side, trading inside of a SIBI. On the discount side, traded inside of a BISI. Or this one right here is an inversion. On this side, discount side is a BISI, fair value gap. And we're trading back and forth between the two. And if I had to flip a coin, I don't think it's done. I kind of want to see it keep coming. If they're going to come, let's go. But they're not going to do it. They've already done a large run, so it's probably going to consolidate. Right? It's probably going to consolidate. Dusty, look like a 0.618 retracement like fibs. So you see how it drops down a discount? If I was bearish, I wouldn't short it now. I have to short it in the premium side of the range. I wouldn't be trying to short it now. You have to be on the premium side of the range. Come down, take out this. If it's going to come down lower, take out these lows right here. These two up close candles, right? I mean, these two down close candles, that's an order block. So we just traded into this one right here. If it blows through it, it's coming down more. And if it blows through that, I want to see it come down, attack these lows in here. Said the entry was during the macro. Oh yeah, the S&P ain't done. I mean, the NASDAQ ain't done. So if y'all brand new to this, all I'm doing is tape reading. We just, this is how you practice. I'm warming up for the week pretty much. This is how I get warmed up for the week. It's for the market. I come in, if there's some movement, then some volatility, I start warming up right here. You gotta get your reps in. You gotta get your legs loose, like you're gonna go jogging. Right now, I'm just getting my eyes loose and my pattern recognition. And yes, Lenny, you got a macro coming up at 850. 850 to 910. That's a macro. We should expect some price movement. How far do they want to drop this? So look, we're on the discount side of the range. Let's go down to a 15 second. (15-second) time frame. Drop down the discount. Yep, it's about to break this. I want to see it drop, take out these lows, and we might get a nice little runner. TZ, just took November 21st sell side. Yep. I was just talking before you came in, TZ. I was talking about that, man. We've been waiting for many months. I counted it. It's been 108 days. We finally went down there, took out those lows, took out those levels. So it's been a long time coming, and you witnessed it. It's like, damn, I witnessed all these days. I witnessed those levels that is most likely going to want to reach for those levels, and it finally reached for those levels. And I'm waiting for about 8:50 p.m. Eastern Standard Time. I'm waiting for that time window. So I'm gonna go ahead and remove this. We about to break those lows right here, and we might continue to run. SIBI right here, sell side imbalance, buy side inefficiency. We just traded into it right there. Mm. 15 seconds. Let's take this high right here down to that low right there. Put my OTE settings on it. No, that ain't it. Right there. Trade into it. So it trades up into this. Touches this order block right here. And now it drops. Just like that. See the 50% level? You can sell right there at that 50 level. What I did was I take my high, my fib, I laid it on this high right here because why that high? It's an energetic move. I see an energetic move down. That started the move, that swing high right there. And I lay it at the bottom of this fib. I get premium side discount, 50%. Above it, premium. Below it, discount. As soon as it trades up to that red level, you can short. Anything above it, more of a premium. You short in premiums. Now it's coming down to discount. We got these lows in here. Over here to the left. Attack that low right there. Trades back in to the SIBI. All right, trades back into the SIBI. I would prefer to trade up here in the premium. But you can see on the discount side it's respecting the SIBI. And boom, look, is that random? Is that random? Y'all see that? Taking out that low. Look at the reaction. Shoots back up. Is that random? Y'all witnessing algorithmic price action. Algorithmic price action. I don't think that's random. Look at the precision. So that low right there, right? That's liquidity. They took it. They grabbed the liquidity. So it's pretty much done. I'm gonna leave that there for now, but I don't think when I say done, I'm talking about like that liquidity. I no longer have to reference it. So at this point, we can see if it wants to drop lower, and then I got projection levels. So let's go out to 5 minutes. Look at a 5 minute time frame. Might have to look out a little further. Let's go out to 1 hour. Let's go out to the daily. So on the daily time frame, right? Let's go over here to the left. Over here, we got an order block back from September 2025, September 2nd. And then in here, we got a, what is this, y'all? What is this in the chat? What is this area and price? The bodies, right? Look at the bodies. They don't overlap. They're separated by the bodies. So all you see is this wicks. So what is that? What do we call that? What do we call that? Yep, Daryl, volume and balance. So I'm gonna highlight that. Drag it all the way out to the right. And for whatever reason, if we drop, if we slip, that's gonna be my draw. That's my next draw. So if I was to go short, I'm looking for that right there. Looking for that right there. Let's go back down to the 1 minute. All right. 15 seconds. So here we are, dropping. You see the projection levels, we already hit it, boom, just like that. Let me remove this. Trades back into the range. Trades right back into that SIBI, right? Right back into that SIBI. Is that not a sensitive level? Look at that right there. You gotta be on point now. You gotta train your eyes. Look at the midpoint. Is that random? Trades right back to the midpoint. Nah, that's not random. Boom, taps it again. Is there something there? What is this sorcery? What is this magic? Are we supposed to know this? We got a macro coming up here in 1 minute. Got a macro coming up in 1 minute. And we're gonna see what price wants to do in a minute. Yep, follow the profits, inefficiency. Yep, not random. Trade right back into it. We can invert it too. So we just boom, inverted it. Are we gonna do it on a closing basis? Now let's say we go higher because we did take out that key level, right? Let's say we go higher. We still got these equal low, these equal highs up here. Still got these equal highs. That was a nice displacement up. So let me drop down to a 5 second. Nice little bissy right there. I'm bearish, so I don't want to go long at all. I don't want to look for no longs. I'm gonna stick to my narrative, which is bearish. But if it comes up higher, then I let it go. I filter that out. I let it go. So if it starts to, because we swept liquidity, right? Took out liquidity. They might want to rally it higher and send it higher. Go attack those highs. Trade back down. Still respecting that gap. Why I won't leave that gap? Why it won't leave that gap is the question. 15 second. Trades back down. Look at the order block. This candle right here on the 1 minute, that's an order block plus inversion fair value gap. Trades down into it. If it closes below the midpoint, it fails. But it has to do it on a closing basis. We inside the macro as well. So we just began the macro and we just took out liquidity. So got higher. Let's go out to the daily. Yeah, I think it can probably rally back up. Unless they really bearish. So the move is over. Like if I was the short, like I believe because we just dropped significantly, I would say that move is over. So that's why it's becoming high resistance right now. It's chopping around. That move was over. If y'all just joining, we're looking at the NASDAQ, looking at these futures markets. We're talking about the news, irrelevant news, and the things that's going on. And I'm tape reading with y'all. I'm tape reading, get my eyes prepared for this. Let me see if I can log into my demo account. Let's log into my demo account. 1 minute. So on the 1 minute, right, it's trading down into this order block. Five second. Back out to the 1 minute. Make sure y'all hit that like button, subscribe. Say, I don't want to short this because it already ran lower. I want to use the order block. But I'm not bullish. So you got to kind of like, even if it runs higher, right, you got to let it go. You got to let it go. That's not part of my analysis on the higher time frame. So I don't want to press any buttons because I'm bearish and it already ran lower. So you got to, like I said, you got to observe. Now that's me. You got to control your impulses. When you start doing this, you're going to be very impulsive, right? Part of me wants to short this and a part of me wants to buy it. So, but you got to come down to a logical reasoning why not to do nothing. Why shouldn't I do nothing? Why shouldn't I just keep chasing, right? Because the shit then opened up and dropped hundreds of points, right? So if I wasn't in sometime last week, then I will be chasing if it goes any lower. I need a premium. And if I want to go long, right? So it dropped 388 points. But if I wanted to go long, well, that's going against my bias. My bias is bearish. I'm bearish. So if it goes long, right, I will be going against that. That's like driving against traffic. You see this downward price action? I will be driving against traffic, right? And if you're going to drive against traffic, you're probably going to get hurt because it's going to continue to go lower, even if it does shoot up higher. It's coming down now, but remaining disciplined in this game. If you're going to learn this skill set, discipline is like the number one thing. Psychology and discipline is something that you're going to have a hard time overcoming. But we got a nice little displacement right there. Let me go down to a 15 second. 15 second. And I just missed the entry because I was yapping. But the 15-second time frame right there, Sibby, traded right into that. Gonna come back into it. Let's go down to a 5 second. 5 second. Yep, I missed it. But 15 second. On the 15 second, the entry would have been right here, Sibby. Trade right up into it. See if I can get back in it. Let's see if we can trade back into it. Very heavy, very, very heavy. Very heavy. A lot of volume in the market. 5 seconds. So yeah, we blew through that significant low. 1 minute. much you want to give it to me. So I just put a demo trade on, right? Just put a demo trade on. Not. Let's try. Let me put this down right quick. 1 second. Trying to get in and get out. Get in right there. Out to the 5 minute. Back out to the daily. Gotta look at the daily right quick. Look at the daily. Over here on the daily, let's see if we can run down to right here. Boom. All right. Let's come back down to the 1 minute. Now, because we already ran significantly, it could fail. So I'm not demanding much. But let's see. Entry was on the 5 minute, 840 Sibby. At 850. But you can see 1 minute time frame, right? I enter on the Sibby. And on the Sibby, I got 10 micro contracts on, right? 10 micros. Not trusting this shit really. Let me do this right quick. Let me draw my quadrants just to measure strength and weakness. Right here. Really back and forth. Really back and forth. I like how I traded into that. Let's show some weakness. We're still in the macro. We're about to start 9 o'clock here in a few seconds. So it's going to be interesting at 9 o'clock hour. Go out to the hourly. Now, what I'm watching for is like that right there. I don't want to see that. And if it closes above this level right here, I'll kill it. Yep. Just what I thought. So I'm stopped out. Very volatile, right? Very volatile. So I got stopped out on that one. That's because guess what? What I just said. You'll be chasing it. You'll be chasing it at these discounted levels. And I didn't want to do that. But that's why you practice. So from this candle right here, open to high right there. 11 points. And it could still come down, but look at the wick in that. Look at the wick. Let me do this right here. I'm going to try it one more time. All right, try it one more time. Fibonacci from this high down to that low right there. That's your range. Your dealing range. That wick. See how they do with the wicks? They do the damage. The wicks do the damage. We just began the 9 o'clock hour. We trade up. Premium side of this high to that low. Premium side of the range. And let's see if we can get some weakness. Make sure you put your stop loss. Very volatile, very volatile. Very volatile. Now they're chopping it out because they done ran it already. They already done ran it. I don't see it coming down there. Not right now, at least. So on the premium side of that range, it just traded into a, yeah, I'm not liking it. Not liking it. What's the daily telling me? Let's go over to the left. Yep, it's just hanging out at that level. So the move is done. That's what I mean. The move is done. The move is done. And I don't trade on Sundays. I'm just trying to put on a demonstration. So I don't trade on Sundays because Sundays, the market, you know, is too volatile. If the market opens like that on a Sunday, you're going to get these wicks and it's still going to go lower. Watch, it's still going to go lower. Let me get that. Let me try that right there. Let me see. Those wicks are doing the damage. Those wicks are doing a lot of damage. From this swing high to that swing low. I got in near equilibrium, which is the midpoint of the range from this high to that low. Stop loss. And we're still in the macro, so I want to see some speed eventually. See if it wants to drop. 10 micros all on. I'm gonna get out. I'm gonna take 5 off right here if it can drop. So what I'm gonna do is I'm gonna put a buy limit order right here. And I'm gonna peel off 5 contracts right there. Make sure y'all hit that like button, subscribe if you're learning. I'm doing real-time demo trading, real-time demo trading. And this is where you want to start. If you're trying to do this, you got to start in a practice environment, right? You got to start off by practicing. I just sat there and told you I'm warming up for the week, and this is how I do it. And practice makes perfect, right? Practice makes perfect. Repetition, repetition, repetition. Repetition. So I'm knowing this one to go lower. So I could have pulled contracts off right there. You see, it just took out that low. So we just broke that range, right? Just broke that range right there. I got 10 micro contracts on. So we just took out this low right here. You can see a slight little reaction in price. I could have paid myself something, but I'm just holding it for now. Right? See, I could have just paid myself right there. But I'm thinking it can go a little bit lower. We're going to see. Bring my stop loss down. And right now, the price is what? It's high resistance or low resistance. Y'all tell me in the chat. Is it high resistance or low resistance? High resistance or low resistance? Let me read the comments. Can I use the 1 hour for bias and 5 minutes trade fields? Yes, you can, Dusty. Or do I have to use a 4 hour and 15 minute? Daryl, yes, it's high resistance. It's high resistance. So what it's doing now is like a barcode. It's barcoding back and forth. So this makes trading, this makes it a little difficult when it's doing this, right? This is high resistance. Look at the wicks doing fucking damage. Wicks are doing damage, yeah. High resistance. The wicks are doing damage, right? So if you, like, I got in a trade earlier and the wicks got me, but it's still, I'm still knowing it's coming lower, but you got to be able to sit through the wicks. And that's what I was explaining earlier, sitting through a trade for 2 weeks. It's very hard right now because of the volatility and the extreme caution around the markets right now. These markets are extremely volatile. So if you're going to trade, you gotta use low risk, the lowest risk possible that you can possibly use. And guess what? The lowest risk possible can make you a lot of money. So very volatile markets. You got to be very cautious in this. Yep. And then you got to submit to the time. So right now we're still in the macro. It's been about 20 minutes. Still in the macro. So let's say, check it out. Let's say it comes down, right? Let's say it comes down again. I'm going to pay myself this time. See, last time I didn't pay myself, but because it's high resistance, I'm going to pay myself 5 contracts right here. So if it comes down, hits that level, I got 10 contracts on. But if it hits that level, I'm going to go ahead and secure some profits. Secure some profits, right? Secure the profit. Got to secure the money, pay yourself. What I'm gonna do is I'm gonna roll my stop loss down. So what you can do is you can lock in your trades and reduce the risk. You can have trades where there's no risk on the trade. It's right there. I'm gonna lock in $20. So if I get stopped out, I get stopped out plus $20, right? So it just traded back up, order block, bearish order block right here. Bearish order block right there. Trades into it, rejects cleanly off of it. Now I want to start seeing some displacement lower. And this time I'm going to pay myself right there. I'm up 440. If it hits this low right here, I cut half of that. I take profit in half of that. Trades back into the order block. Is it random that it's seeing sensitivity at that level? No, it's not random. Not random at all. Submitting the time, man. Submitting the time. That's another thing that y'all might not know about. There are time elements in the market because the markets are algorithmic. They are rigged. The hidden thing that most people can't see is the time mechanisms. So there's certain time mechanisms that you can't see on this chart, but you got to know it internally. It's an internal clock that you got to keep up with. Macros, time of day. We just hit 9 o'clock. So if you know Asia around 9 o'clock, it pretty much stalls out. That's pretty much the end of the peak of the Asia session. So we're coming to an end on Asia. Boom, just like that, right? So boom, there goes my partials. Right at 9:10, which is the end of the macro time. Right? So now, still going. I took off 5 contracts. Still rolling. I'm gonna lock in, let's say about $57 right there. So I'm up 425. Let's go back out to the daily time frame. On the daily, what am I reaching for on the daily? So on the daily, I think, again, you remember I highlighted this volume balance down here, right? That's a draw on liquidity. Well, I'm gonna go ahead and let it ride to see if it can come down to that draw right there. See if it can come down to that draw on liquidity. That's gonna be my level of interest. Yep, that's my level of interest. It's gonna be my level of interest, and I want to see it do it fast. Do it with speed, right? Speed. Come down to that BISI on the daily that I have highlighted. Trade down into that. Go down to the 1 minute. So yeah, so my idea on this trade was correct. I got stopped out twice because of the volatility. I could have had a wider stop loss, but I was demanding a tight stop loss. I was demanding a tight stop loss, but you can't get tight stop losses in these conditions. So you got to be able to be comfortable with a wider stop loss. But whenever you have wider stop losses, you got to reduce your risk. You got to reduce your risk on the trade. So I had 10 micros on. Maybe I should have ran with 5, right? Start with 5 or less, right? And we ain't even talking about the minis. The minis are the nuclear weapons. So you can still make good money with micros. You can do good. You can make 6 figures with micros. Sibby, right there. Zoom in, Sibby. You can do more than 6 figures. You can make a whole lot of money. Sibby right there. Trade into it. Trade right back into it. See how it's respecting the midpoint? Is that random? Y'all tell me if that's random or not. Is it random or not? Any questions? Those wicks are crazy. Yeah, the wicks are crazy, man. The wicks are crazy. Boss, will you say that that's a high frequency trade? Yes, follow the profits. That was a high frequency scalp, right? Where I just got in, got out. So my entry point, my first take profit on that, from entry down to that low right there, that was 30 something points. 30 points. It don't look like it, right? 30 points is, you know, it's not nothing to scoff at. That's right there. You can quit your job with 30 points a day. You can quit your job with 30 points a day. You start learning this skill set and you're able to get 30 points a day, nothing more than that, you can quit your job because that's scalable. I ran 10, I took off 5 micro contracts for 30 points right there, right? That's a high frequency scalp, just like that. Here we are again. We got a new range. We traded back up into this Sibby. You could have entered there, and guess where you can get out at? You can get out right here. That's another high frequency scalp, just like that. Order flow bearish. So you're in sync with price action in the direction that it's trying to reach for. We know the higher time frame is bearish. Higher time frame is bearish, so that's what we're looking for. So look, we trade back in what? Sibby. They say we enter at the midpoint of the Sibby right there, and we aim for that. That's another 25 points if it decides to drop down to that level. Another 25 points. Me personally, I'm about to take off 2. So I'm gonna come over here to the top left. I'm gonna scale off 2. Buy 2 right there. So now I paid myself some more. So now I only have 3 contracts on. I started with 10. Now I'm down to 3. Right? So I locked in profits because we're already overextended and we're very bearish and the market already ran. So I'm getting in on the tail end of the run. I'm in on the tail end of it. So I'm not demanding much more in price. So now if I'm already in a trade, I'm trying to pay myself and lock in profits. Trying to pay myself and lock in profits. Trading back into I'm not adding back to this position either. So whatever I got on the table, it's already locked in. If I get stopped out, I'm gonna get stopped out at about, let's say, $60 right there. So if I get stopped out, right, I'm gonna get stopped out for 60. High to low, right? That's a new range right there. From this swing high down to that swing low, come up. We're in the discount or premium side. Y'all tell me in the chat. Are we in the discount or premium side of this range? Make sure y'all hit that like button, subscribe. Yep, Daryl, we're in the discount side of that range. But because we're in the discount side, right, I'm bearish. Until we hit a key level on the discount side, on the higher time frame, I stick to my bias, which is bearish. You can be a buyer at discount, right? But if the narrative and the bias on the higher time frame is bearish, I'm filtering that out. I don't care to look to buy. I want to see it come up to a premium and possibly short it if I'm bearish. Yep. So we just look, is that random? Look, from that range, right? This how you know this is algorithmic. If that's random, right? Why do we just tap this line right here, which is equilibrium? We tap it. We reject off of it. Is that not random? I'm about to bang my table up in here. Is that not random? Can you not see? Why do we tap the equilibrium? Because you could short right there equilibrium. You could short that if you was bearish and you needed to get in. Now we trade right back to it. Is that random? I don't think that's random. We tap it again. Or is that algorithmic? I'm gonna take another partial off just to lock in these profits. Or I'm just gonna let it leave alone. If it stops me out, it don't matter. I made money. It doesn't matter, right? It doesn't matter. So on the premium side of the range, we got this SIBI again, and we got this order block right here. Got an order block on the premium side. So see what they want to do. In the meantime, man, I appreciate y'all joining. Appreciate y'all subscribing. Hopefully y'all are learning something. What y'all think about this style of content where you just, I'm trying to figure out my format, but this is more what I do in mentorship. This is how I train in mentorship. So now we at the premium side of the range, right? Now we're at premium. Now you can start considering if you're going to be bearish to short that. That's the third time we hit the equilibrium point and we won't break above it. We won't break above it, right? That's the third time we hit it. And we won't break above it. Is that not random, or is that, what is that telling? Is that telling you that this is algorithmic? All these markets are algorithmic. I don't care what market you look at. Same function, same repeating phenomenon. Look at that. Look at that. I started with 10 micros, down to 3. I locked in profits. Always looking to pay myself. Because I don't have, when I got in, right, I didn't have the best entry. I got in on the tail end of a price run. So I'm very nimble right now. Being very nimble right now. Look, when we get down here, or if we get down here, this low right here, I'm gonna pay myself again. I got 3 on, I'm gonna pay myself 2 so I can lock in more profits. Right here, I'm gonna pay myself 2 contracts. Started with 10. We sell off, come back down, I'm gonna take off 2. Algorithmic price action. Algorithmic price. Say it with me. Algorithmic price action. You just got to know what you're doing. You got to be taught the right way. You got to have a mentor. You got to have somebody to show you this. You're not going to learn the markets by yourself. You got to be shown this. Come on back down. Take out this low right here. Pay myself another 2 contracts. If you are witnessing this, some people might see this and be like, yeah, whatever. But if you're somebody who's conscious and aware, you can see quickly how this can replace income, or this can substitute income. You just got to know what you're doing. This can replace. Look, I'm using low leverage. I'm not using high leverage at all. I'm not using big capital. I'm using the smallest leverage in a teaching environment with micro contracts. And I'm showing you how you can print money. You know what I'm saying? You can print freaking money. So look, we drop down, right? We drop down. We swept this low right here on the discount side of the range. We swept that low right here. Took out that low. Minor side liquidity. We came down, took out that low. That's why you see that reaction in price. And now we coming back up. So what I want to do is I want to lock in some more profits. I'm going to drop this down right here. I want to lock in some more profits. So that's another $100 right there. So if I get stopped out, I get stopped out for $100. Right? 2 contracts on right now, I'm up $230 something. Now we trading back up. We're in the lower quadrant of the dealing range that we're in. We're on the discount side of the range. We already came up the premium 1, 2, 3, a few times. And you might be somebody who's like, damn, it didn't take my profit. It was right there. Well, you got to look a little closer because there was some liquidity right there, and that can happen. Trade up. You don't even have to get down to this low. You can pay yourself right there at that low and take your profits. Right now in this trade, right? I already peeled off 7 contracts and I'm up currently about 38 points. Looking to take off 2 right here, about 57 points. Fuck it, I'm gonna go ahead and call it 60. About 60 points. I want about 60 points out of that. $5,975. Right there. All right. So price doing what it does. Are anybody else trading? Anybody else got orders on? Anybody just observing? This is the boring side of it, right? This is why I don't really... Are you ready for this? Do you think you can do this? Let me know in the chat. Do you think you can you do this? Because guess what? Before you take that pill, right? Before you take that pill, you got to ask yourself, is this for me? Is this for me? Can I do this? Can I do this? And some say, hey man, you make it look easy. And it can be easy in time, but in the beginning, you got to go through some stages, man. You got to be initiated. Got to be initiated. Here we are coming back to equilibrium, right? And again, if I get stopped out, there's $100 I get stopped out at. No big deal. That's $100 that you locked in the market. Not even sweating that it didn't come down here. Look, touches equilibrium again. Touches the equilibrium point again. It's not random, y'all. It's not random. Follow the prop. You say you're observing. Okay. Let's go out to the 1 minute. So you can see back on that range on the 1 minute. It's consolidating. Now we're getting into that point of the session, right? We're getting into that point of the session where it's Asia session. You gotta know what time of day it is. It's Asia on a Sunday. So we're lucky that we already seen this type of run. You know, if you were short in the market, you're lucky that you've seen this type of price action. When it's a normal day or a normal week, there's not much going on. But because we got high tensions in the Middle East, we got World War III, oil, economy, all kind of stuff is going on. So these markets are very volatile right now. Extreme risk. Extreme volatility. Daryl, always fascinating to see. Daryl, you gotta learn this, man. You gotta learn this. Cause you're gonna watch it long enough and you're gonna be like, man, maybe I can do this. You know what I'm saying? You gotta learn. You start somewhere. Start somewhere. It don't have to be what I'm doing, what you're seeing now. It could be you could take one trade a week. You could trade 4 trades a month. It's all relative. On the 15 second, it keeps hitting an inversion fair value gap. The higher time frame is key. The higher time frame is key. So like the 1 minute. So sometimes you got to zoom out to the 1 minute because that's driving price a little bit more than that 15 second. I'm just waiting for it to come down, hit this liquidity. And then I'm gonna move on. We're gonna go back into the headlines. I'm just trying to. I didn't anticipate putting a trade on. I said, hey, let me give you a little demonstration, and you can see this is what it looks like. You know, this is a typical dry market. Typical dry market. I'm not sweating anything. So again, if I get stopped out, that's $102. If it hits my take profit, I will look to net more than that. So right now it's just back and forth. High resistance, liquidity conditions. High resistance, liquidity conditions. Make sure y'all smash that like button, subscribe to the channel, share the video. I'm trying to be the top analyst out here. You know what I'm saying? I'm trying to be the best educator when it comes to this. So that's one of my goals, being the best educator, teaching y'all the proper way on how to do this, not rushing you to jump into this, showing you how to properly do it in a demo practice environment. Everybody, that's one thing that's for free. These demo practice accounts are for free. Sign up with TradingView, they'll give you a free paper trading account. So there's no excuses with that. If you never did it before, there's no excuses. There was a time where they didn't even have paper trading. They didn't have demo trading. But you're living in a time now where that stuff exists. So why not take advantage of it? They're giving you all the tools to properly learn how to do this. Give you every advantage on how to do this. So what's your excuse? What's your excuse? Now here we are. Can we drop down, take out these lows, or do we want to still high resistance consolidate? I'm looking for a low resistance run. It might not come right now, but let's see what they want to do. Any minute now, I can go ahead and hit my 2 contracts. And if it wants to drop down there, let me remove this. Look, it tapped it, but it didn't feel it. Look at that. It tapped it, but didn't feel it. It tapped it, but didn't feel it. And you're going to run across that too sometimes, where it'll tap your target and won't feel it. It needs to trade through it. That's what I need to see it do. Look how it taps it and doesn't trade through it. Is that not precision? But it doesn't trigger my fucking order. It's all good. I still think it's going to come down there. Or you could just kill it. You know, you can just kill the 2 contracts. But again, that's what they do. Come on down and get my take profit. What's up, AWB? Shout out to you, man. Shout out to you. Come on down, hit my take profit. Yeah. Yep. There we go. I got one contract on, right? One contract on. And that contract still $100. I started with 10. Now I'm down to 1. Started with 10. Now I'm down to 1. So you missed the fun part of the live. Now we're gonna get back into the some funny shit, I guess. But I didn't plan on putting on a trade, but here we are. I'm doing a live demo, a trade, showing brand new people that are interested, people that want to learn how to do this, that you can do it. You know what I'm saying? You can do it. Stop being hesitant. Get in there and learn how to do this. This is the fun part. Yeah, this is the fun part. Showing y'all how to catch fish. You know what I'm saying? So look. I don't move my stop loss. I just leave it there intact. I took off 9 contracts. I started with 10, took off 9. And I didn't calculate. It's probably about $400 or $500, if not more. Just like that on a Sunday. And if it stops me out, cool. But is it random? Check it out. It comes back and gets my take profit, right? It comes back and hits my target. And then it reverses. That's why I'm not demanding anything else. I'm not sitting here putting in my order. Yes, I see it coming down here, but did I need it to come all the way to my target? And look, I just got stopped out. So my stop loss, which I rolled and take profit, just got stopped out for $34. Altogether, that trade was profitable, right? My point is I didn't demand for it to come down here. I started scaling out every time it dropped and took out a new low. I started scaling out my contracts because the market is high resistance. That's another example that I just showed y'all. That's another example of trading in high resistance conditions. Can you trade in high resistance conditions? Yes, but you got to do it the way I just showed you. I prefer low resistance conditions, but when the market is in high resistance, you got to go in real cautiously. You got to know what you're looking for, and you got to sit through it. That took a lot of time just now, right? That took a lot of time. If you missed it, just go back and watch it, right? If you missed it, go back and watch it. That took a lot of time. And when I go out to the 5-minute, that trade that I took, all it is a consolidation. You know what I'm saying? I just showed you how to bank about $400, $500, $600 right quick inside of a consolidation. So that ain't random, right? That ain't random. And yes, that was high frequency trading. So after that, I'm done. I'll wait for the next session. I'll wait for the next trading day. But as far as me continuing to go short, I think we can still come down here. Maybe this session, maybe during London session. But do I need it to do it right now? No. I got my little piece of the pie. And now I move to the sideline, right? So let's come back over to X. And I'm not gonna hold y'all too long. Let's see what's going on, man. Let's see what's going on out here in these social media streets. If y'all just joining, please, appreciate it. Hit that like button, subscribe. Y'all press 1 if y'all. I got 13 people in here. Y'all press 1 if y'all learned something, right? If y'all witnessed that and y'all learned something, press 1. Let me know that y'all witnessed it. You know what I'm saying? And hopefully, I inspired you to pick up this skill and do something with it. Appreciate it, Daryl. Appreciate it, Shep. Follow the profits. Okay. Yep, Shep, I know you've been trying. You're learning, TZ. Yep, TZ, you know what time it is. But as far as what am I looking for? Like, okay, macro. Let's think macro picture. All right, macro picture. We got conflict in Iran. We got conflict. You know, it's starting to ramp up. We're starting to see airports shut down in the United States for whatever reason. I'm hearing from people that I look to. They think some type of conflict is going to come to the United States soil. I can't say it's going to happen. I can't deny that it's not going to happen, nor say it will happen. We have rising energy prices. I'm bearish on the stock market, as you can see. Stock market is coming down. We're in the early stages of it. Gotta zoom out. Early stages of the stock market coming down. And when it comes down, y'all, check this out. Let's go look at the continuous. Look at the continuous. for the NASDAQ, right? If it comes down, I'm seeing, man, if we see something crazy, right? I could see the NASDAQ, right, coming down to this level right here. And this is a continuous contract, or the continuous NASDAQ. Yeah, NASDAQ futures contract. I could see it coming down to this level right here. But my concerns is, check it out, if it comes down to that, which is about 22,500, what if situations get really dire and worse? And I'm not sitting here wishing that would happen, but hey, these markets, I don't control these markets, they do. But let's just say geopolitical events happen, global resources spike, then this is going to come down and probably trade through this. And if it does, man, this level down here, because these markets are overinflated. A $16,000 NASDAQ being up here at 24,000 is like, it's not normal. Being at 24,000 in overinflated NASDAQ is not normal, because just last year in April, next month will be April, just last year in April, right, the NASDAQ was at 16,000, which was unheard of. And then they ran it all the way up to 26,000. So if something extreme happens, I could see them running it all the way back down to this low down here, or in the short term midpoint right here. So that's what I'm seeing for the NASDAQ right now. And it can happen fast. If we look at, let's say, gold, still bullish on gold. It's just consolidating right now. Gold consolidating. And gold could slip down for whatever reason. It could come down a little bit, but I'm still bullish on gold. Still bullish on gold. Let me see. Got this right here. It's an inversion fair value gap, and it's currently trading right in the middle of it, right? So it's kind of neutral, right? It's kind of neutral for gold. It's at equilibrium, but I'm bullish on gold. Silver, I think silver could come down because it's already showing signs of wanting to drop, and we got these lows in here. Got these lows below the market. So yeah, a lot of people got manipulated thinking silver was about to go to what, $200 or whatever. Now it's coming down. They ran it up just to bring it down, right? So that's silver. Oil sitting at 109, pushing. Oil is pushing, yo. So every day that oil goes up, you already know gas prices about to go up, energy bills are going to go up, everything is spiking up, right? Cost of goods. So what they're doing is grocery stores, they're going to be passing off prices to you, taxes, everything's going to be passed all over to the consumer and let y'all have to deal with whatever prices. So yeah, grocery bills are about to go up. Man, pray for the world, man. Pray for the world, because it was already hard. Now we're dealing with high grocery and energy prices, and they drug us right into this motherfucker. I'm looking at certain websites, and the public respect and sentiment for Donald Trump is going down because of what we recently did over there in the Middle East. So he's losing a lot of support from people that trusted him like Jesus. People trusted him like Jesus. Let me read these chats. Daryl, when you come into trade, okay, can you make the call, please? They're talking about the Clarity Act to get passed. We need that Clarity Act. Even if they pass the Clarity Act, right? Check this out. Do people consider this? Let's say they pass the Clarity Act for crypto, right? That doesn't mean the prices got to do anything. Now we're gonna be looking back like, damn, what next, motherfucker? We got the Clarity Act, but what next? The prices don't have to do nothing because they passed the Clarity Act. So y'all gotta consider that, man. Y'all gotta consider that. I know people waiting on the Clarity Act, but y'all gotta consider the prices ain't gotta go nowhere because these markers are showing you that they manipulated. It's crazy. What's up, Jay Manson? That ball shit. Yeah, man. Trying to teach. Trying to show y'all that ball shit. Let's look at some things right quick. Let me see. Get some updates. I think I ran through some things. U.S. economy. Let's play this right quick. Let me play this video. Let's get into the economy because I'm just concerned about people having to, you know, we about to go through it with energy prices. So let me play this.
Provisions for the previous 2 months and a slight rise in the unemployment rate from 4.3 to 4.4%. Altogether, it paints a picture of a labor market struggling across a number of sectors, including some that were engines of recent growth, like healthcare and construction. Stocks fell on the news, capping a week of declines, along with a rapid rise in oil and gas prices, a result of President Trump's war with Iran. The average price of a gallon of gas rose 11% this week. To unpack today's numbers, we turn now to Diane Swong, chief economist at KPMG, that's a tax and advisory firm. Diane, good to see you. So with the usual caveat, it's important not to overreact to 1 month of data. The losses in today's report were widespread. What does all this tell you about the economy?
Well, part of the losses in healthcare, this was the one sector that was really sort of the one-legged stool holding up the overall labor market. And we had a major strike in California and Hawaii that shaves 27,000 healthcare worker jobs off, with some collateral damage as well in the unemployment rate with temporary layoffs. So that was part of it. But even taking that out, it still was a lot of red ink. And when you lose the one stool holding you up, you go negative and the unemployment rate rises.
There's been a lot of talk about employers having to navigate uncertainty around shifting tariff policies. How big a factor is that uncertainty?
It really acts like a tax on the economy.
Okay, she's boring. Let's keep it moving. Some of this should be dry. I just want to get straight to it a little bit. She's boring. Let's look at TikTok, man. Y'all be on TikTok? I just now got over here on TikTok. Created an account for TikTok just so I could see some of these headlines, and let's see what some of these TikTok videos are doing. We got a lot of Americans trapped in Dubai, so let's see.
What's up, y'all? This is my friend Remy.
Very fast World War III update. There's a lot of things happening in the middle of the night right now that you need to know about. Iran struck one of the world's largest oil exports in Saudi Arabia. Iran is striking more U.S. bases and assets in Bahrain this morning. Fox News is reporting that several U.S. warplanes have crashed in Kuwait. Apparently, Germany is seriously considering on joining the war. The U.S. struck this oil pipeline in Iran. This pipeline produces 800,000 barrels of oil a day, which is 20% of Iran's total oil supply. Trump told the New York Post that the amount of U.S. servicemen that have passed due to this conflict, quote unquote, could be quite a bit higher than the 3 initially stated. China warns that the conflict is widening. The U.S. Embassy in Kuwait is warning all U.S. citizens to seek shelter and to not travel. All of these countries issued a joint statement saying, "We condemn Iran's attacks and we have the right to defend ourselves." Very fast World War III update. There's a lot of...
Come over here. I'm going to look for like gas prices, see what they saying with gas. So I want to see what people got to say. I'm still trying to learn TikTok. Now, this is really my first time over here, so y'all bear with me. Give me some search ideas if you got them. Let me see. Let's see. 3 hours ago. Let's play that.
And it is over $100.
Pennsylvania gas prices jumped nearly 10 cents overnight. Pennsylvania gas prices jumped nearly 10 cents overnight. According to AAA, the average price per gallon is now $3.54. Just last week, Pennsylvanians were paying 44 cents less on average. AAA says one reason for the spike in prices is the conflict in the Middle East, which sent crude oil prices higher. Something similar happened in March of 2022 during the start of the war between Russia and Ukraine. According to AAA, New Jersey is averaging $3.28 per gallon, and the average price per gallon in Delaware is $3.34, which is about 10 cents cheaper than the national average. Pennsylvania gas prices jumped near...
You know, some people don't care about gas prices because they making so much money. They don't give a fuck about gas prices.
This man said, go ahead and get gas because gas is going to go up another 40 cents today. And baby, I'm put $20 in my tank regardless. I'm not sure how far that $20 is going to get me, but I'm going to put $20 in my tank. And then I seen stuff talking about gas is predicted to hit $5. I'm still only going to put $20 in the tank. I got to put gas in the car. I can't control the price of gas. At this point, I'm blind to the gas. Put 20 on pump, whatever, because it's finna get hot outside, and I'm gonna still be outside. I gotta pay for gas. The kids gotta get to school. I gotta get to work. The weekend's about to be lit. Put 20 on pump, whatever, and that's it. The gas gets $7, $8, $9, $10. It's gonna be 20. That's it. I don't know what people want us to do. Talking about, oh, go fill your car up. If I fill my car up, when the gas run out, it's still gonna be hot as hell. Like, I got a whole lot of shit I'm fighting. I'm on antidepressants right now. Baby, gas, the price of gas is the least of my worries. I mean, bare bottom, very least of my worries. Put 20 on the pump, and I'm going to go on by my day.
Yeah, until you realize the 20 is only giving you 5 gallons, goddammit. Because, see, people not thinking, man. People not thinking. What else? What these other people got to say? Let me see.
Lord, can we please stop this war or this violence, whatever you want to call it? But gas is so high in Texas right now. Some of y'all might be like, nigga, that's not that high. $3.19 in Texas is high. I got to fill up a half a tank now on my truck, or I'm going to be paying $1 million.
Hey, you ever think about what the truckers, let me see if I can, what the truckers got to say, because I've already seen some stuff where they saying, hey, they not going to be able to afford to move shit around, truckers, gas or fuel. Let me see what the truckers got to say. Here we go.
All right, Red Hat folks. What's the justification now that our fuel prices have shot through the roof? The town that I live in here, we have a local Love's, and it's $5.03 a gallon in Texas, close to where all the refineries are at, where fuel is usually cheaper. It has gone through the roof within the past few days. We were barely making it as it was. I'm not going to pinpoint one thing, but quite a few things in the trucking industry was keeping us from even making it. And now we get our other leg broken, and now we're crawling across the finish line. We were just kind of hopping and limping across it, but now we got to drag ourselves across the finish line. Some of you might justify, well, a lot of you Red Hat people will justify this whole thing that it had to happen. But the last I remember, it was Make America Great Again, not anybody else. We're trying to solve the problems of this country, not anybody else's problems.
Yep.
And going over to try to solve somebody else's problems, now you're crippling your own country even further and further each and every day. Again, a lot of you will justify it and say, hey, you know, this is how it should be, or I'll wear my red hat proud for the rest of my life. And, you know, he's my Lord and Savior. You probably will never wake up. But for the rest of us, this shiznit is screwed up. And I don't even know what the solution is. That's the sad part.
Yeah, man.
I have no idea.
What's the solution?
What we can do.
I think this one right here is hitting, bro, because it was already a struggle, right? Things were already tough. Things was already struggling. But here they drag us into conflict. And Lenny, I agree with you. Airplane tickets about to go sky high. Travel, period, is about to go sky high. Truckers about to be out of business because they can't afford to keep going, right? So trucking industry. So if trucking companies go out of business and they can't afford to move supplies and goods, that's your first sign that the economy is about to get fucked up because nobody is about to deliver your groceries. Nobody's going to give you your tissue that you need, you know, like the pandemic. Food supplies. What's the solution, y'all? Once we struck Iran, there's no going back. That's where we at right now. There's no going back. So what's the solution? Lenny said he needs to cut back on the Big Macs and he'll be able to afford gas. Yeah, man, that's crazy. Short the market. Yep, J Man. I just short. I don't know where you came in, J Man. So we were shorting it. I did a live demo trade. I shorted it, and everybody got to witness it. Let's see what else. I'm just trying to get some updates. I'm gonna type in. Let me see what this old lady got to say.
Oh, mother. Son of a bitch.
579 for diesel. 579 for diesel. That's cheap, actually. That ain't bad. Yeah, man. Let's go look at the airports. Let me go to TikTok and see what I can see at the airports. See at the airports. This was crazy. This was the other day, but this is what we're dealing with right now. There's a bomb threat in Nashville on a flight.
I'm just trying to be discreet.
Stand up, let's go. Stand up. Everybody heads down. Stand up. Stay down. Stand up. Everybody just stay down. It's okay.
God damn. Hands down, heads up. Have y'all ever had to do that drill on the airplane? I haven't had to do that one. I never had to do that drill on the airplane. That's crazy. Let's see.
This ain't the time to be flying, y'all. Sit y'all ass at home. Breaking news, y'all. Kansas City International Airport just had to evacuate due to some bomb threats. Look at this. That's crazy.
God damn.
Pushing them boys up out of there. Evacuate right now. If y'all love y'all life, y'all moving a little bit too slow for me. I will be getting up out of there. So right now they on a major security alert, and this happened from 1 to 5 p.m. So staffs and passengers was evacuated, and now they say that they have the building surrounded with the bomb squad. They do have over a dozen K9 dogs on alert around the building, searching, trying to sniff out and see what they can find. They blocked off the roads and they not allowing people to drop off anyone. The Kansas City Aviation Department said that they are aware of the situation, and the KC police and the FBI on site investigating a potential threat. Now they haven't confirmed what was the threat, but at the same time they do have the whole airport on lockdown. So any information, new information that they have coming out, I will try to give y'all an update. Be safe. Keep y'all ass at home. This ain't.
So yeah, man. It's almost like pandemic vibes, like when they try to shut the nation down. Like even people over in the UAE and Dubai, they was having hard times. People still stuck over there. There's people over there right now stuck in Dubai. Maybe I should. Matter of fact, let's go search that right quick. Stuck in Dubai. Stuck in Dubai. So there's people over there right now just stuck in Dubai. Let's see. 2 days ago.
Hello TikTok. I thought I would just make a quick video about where I've been and what's been going on. I am under like,
and I just don't know why. If I was your man, baby, you
might as well enjoy
what I do. I be coming home back to
baby,
you
come to
every
Dubai.
night, doing you right. You're the type of woman deserve good things.
Let me pause that. I'm my bad.
The lady.
I probably get a strike for that. You know, you can't play music on YouTube, so I might get a strike for that. Just dawned on me. Let's see this. Day 6.
So this is.
So, what's your thought? I mean,
what the hell?
So this is now day 6 of being stuck in Dubai. So people have been like contacting me. They have questions like, what's going on? What are y'all doing? Are you safe? The answer to that is yes, I am safe for the most part. And I'm actually a pretty tough person, but going on day 6, I'm starting to get anxious. Like, I was staying at a hotel at first, but this is a prolonged situation, so they basically stopped paying for my room. So I'm now in an Airbnb, but this was a little bit more convenient anyway because I was tired of just eating the same thing. So I was able to get groceries and stuff like that and kind of feel a little bit more at home. At first, you could hear like explosions and stuff like that. Like they had us at the bottom floor of the hotel. They didn't want anybody to use the elevators and things like that. But for the last maybe like 2.5 days, everything was quiet. And then, of course, last night, things go off again. So they sent out an alert. And yeah, I don't know. This is literally crazy. And the biggest thing is we have no idea when we're going home. I got 2 flights out of here going different directions because they don't want to fly to the US. They were both canceled. So, and then they're limiting the flights, which makes sense. But it's just like, when are we going home?
Yeah, man. I heard they said get to Saudi Arabia, goddamn it. Get to Saudi Arabia. If you're in Dubai, you gotta just get on the ground to Saudi Arabia because they're not flying nothing out of some of these countries, man. So yeah, man. What else can I look up on TikTok going on that's relevant? Got the gas prices. Let me see what else. We got troops at the airports. What the fuck?
Breaking news, transportation.
1 second. We got soldiers moving. They get deployed. Long lines, man. They all get their haircut too. Long line. So that's how you know it's real, y'all. It's real. They're not playing. My question is, how long does it last? How long does it last? How long does it last? 12 hours ago. Being at the airport. So a lot of people stuck at the airports. They all going through it, man. Many people. So many people got TikTok. And here I am in 2026 just getting on TikTok. You know what I'm saying? I'm just getting on TikTok. I looked at it before, but I'm just now getting on TikTok. 2026. I feel like I'm behind. But I thought it'd be a good feature for my channel to watch some TikTok videos. So yeah, man. J Manson, even in war times, people getting haircuts, Yup. That's what I'm saying. Pick up the skill of being a barber because people forever gonna need a haircut to groom themselves. Even dead people need haircuts. So being a barber is pretty lucrative. So that's a good observation, J Manson. Gonna forever be able to cut hair. God damn it. People are always gonna need haircuts. That's a good observation. What else is going on, man? Anything current? Anything else, y'all? Anything else y'all been seeing? Because I'm just one man. I can't keep up with everything. I wish I had a team of people that would just do this for me. Or I wish I had some AI that could just look up shit for me. Anything else y'all want to check out before I head up out of here, man? We pretty much went over the markets. Let me look at Bitcoin right quick. What is Bitcoin doing? Bitcoin, I think it wants to come down, man. I think it wants to come down like as expected. I'm still looking at $48,000 Bitcoin based on that higher time frame. We go out to the monthly. It's looking very droppy to me. I could see it coming down to this low right here. I keep telling y'all that low right there, Bitcoin. I went over stock markets. I went over the futures markets. I went over oil. I went over gold. I went over silver, XRP. Same with Bitcoin, looking a little dumpy. XRP currently trading at 134. I'm not going to give an in-depth analysis on it, but we still where we've been at. We've been consolidating. If I go down to the daily time frame, let's go down to the daily. If I go down to the daily time frame for XRP, right, this sideways price action, we have been consolidating for about 30 days. A little over 30 days we've been sideways. So it's nothing much to talk about until it's time to talk about it, because it's waiting on that sponsorship to either send it higher or lower. So we're sitting here in this sideways consolidation, and I'm luring, just like I showed you that trade setup I just did on the NASDAQ. I'm anticipating it drop low resistance, because when it happens, it's going to happen. Low resistance run, take out sell side liquidity, come down and take out this low right here, which is around $1.11. So if you want to know what I think short term, $1.11. That low right there, sell side liquidity. So we're going to revisit that. We just dropped down there in February. I believe we can revisit it shortly. So you got 10Ks at those lows. Shortage on beef. Matter of fact, let's go look at that, man. Let's go to the CME. I want to go look at something right quick. Let's go look at some other assets, right? Let's come to the CME. Because I don't really follow all the markets, but let me see. That's pretty interesting, J-Man. So you said there's a shortage on beef. So let's go to markets. Let's go to agriculture. And let's see what kind of markets we can look at. Corn, soybeans, live cattle, right? Live cattle. So let's go look at the LEJ6 contract. LEJ6. So what I'm going to do is I'm going to pull up LE. Let's go to futures. Let's go look at the cattle market. LEJ. Live cattle. Futures contract. And I'm going to pull up 2026, right? So this is a high time frame. Let me zoom out to a monthly right quick. And if we look at live cattle, yes, people, we're looking at live cattle. You can trade live cattle if you choose to. I'm not familiar with this market, so I don't touch it. I have to learn more about it. But this is a monthly time frame. Cattle has been dropping. So I'm not sure, because this is a commodity. So I'm assuming whenever prices go up, that makes the price of beef go up. When it comes down, that makes it go lower. So let me see. If we got a cattle shortage, I'm assuming the prices of cattle should go higher. I'm assuming. Let me do a 20-day range. Start on the current candle, look back 20 days right there. All right, man, this shit looks just like the NASDAQ and the S&P. This is crazy. But if we get the range, right, if we get the dealing range from this high right here down to that low right there, that's the dealing range so far in live cattle. Live cattle. Premium to discount. So here recently we traded up, right? We rallied higher. And we traded into a what? Premium or discount? Well, we traded up into the premium, traded into a SIBI, sell side imbalance, buy side inefficiency. Right here. Boom, just like that. Traded directly into it, and now currently it's dropping lower. It's dropping lower. And now that it dropped lower, it's trading into this right here. Y'all in the chat. On the discount side of the dealing range, what is this in the chat? Looking at live cattle. The beef market. Right there. What is that right there? Who knows what that is? Live cattle market. Who knows what that is? Yep, Daryl, it's a volume imbalance. Volume imbalance. So we drop down into the volume imbalance, right? And now it's just hanging out inside of that range. So right now, because I don't track this market, I have to track it a few days. But right now, it's in the discount. And if there's a shortage, I would think the price will go up. If there's a shortage in cattle, I would think the prices of cattle or live beef or meat should start to go higher. So right now, it's neutral. It's trading at 234. I don't know what they call it. A bear. I don't know what they call cattle. Let me see. Let's click on the contract. Live cattle. Manage the risk inherent in cattle production and processing with live cattle futures. Facilitate price discovery and manage price risk related. Okay, and that's cattle. Live cattle. I'm not familiar with this market right here.
CME.
Let's play it right quick. Let's play this video right quick.
Group offers two related futures contracts that provide direct exposure to the U.S. beef cattle market. The feeder cattle futures contract, ticker symbol GF, represents weaned male calves grazing on available pasture forage to ensure healthy skeletal or frame development. Once feeder cattle have developed an adequate frame score, they are then placed into feedlots, where they receive a carefully rationed, high-energy diet to grow them to an acceptable finished weight. These finished animals are then sold to a meat packer for processing. During this final stage, finished cattle are represented by CME Group's live cattle futures contract, ticker symbol LE. The entire process, from pasture to plate, can average anywhere from 18 to 24 months. U.S. beef cattle are raised in all 50 states. However, cow-calf operations producing feeder cattle are centered around areas containing low-cost, high-quality forage topography. Feedlots producing live cattle are generally located in regions where a variety of feed grains are readily available. The U.S. beef supply will expand and contract with the production cycle of these products, which can influence price, beef imports and exports, and consumer demand. The CME Group feeder cattle futures contract represents 50,000 pounds of steers and trades with a minimum tick increment of 0.00025 cents per pound, or $12.50 per tick. The contract is financially settled at expiration against the CME Feeder Cattle Index, which is calculated using U.S. Department of Agriculture or USDA reported auction sale data. Each CME Group live cattle futures contract represents 40,000 pounds of live steers, or heifers, and trades with a minimum price fluctuation of 0.00025 cents per pound, or $10 per tick. However, unlike feeder cattle futures, the live cattle contract is physically delivered at expiration. The delivery process provides the option for carcass delivery at a processing plant or a live graded delivery at an approved stockyard. Both feeder cattle and live cattle futures trade Monday through Friday from 8:30 a.m. to 1:05 p.m. Central Time. Market participants trading these products closely monitor reports from the USDA, including the monthly Cattle on Feed report, which contains information about the quantity and quality of the herd size for both feeder and live cattle. They also closely analyze reports detailing cattle auctions, harvest figures, and boxed beef. To devise a trading strategy, traders will often combine USDA reports with information about the weather, exports, imports, corn, and other agricultural feed grains. Feedlots provide a diet that can include corn, soybean meal, hay, grass, and wheat, as well as additives to optimize healthy weight gain. Consequently, price changes in these products can dramatically impact the prices of both feeder cattle and live cattle. For example, should the cost of corn and other feed rise too high, the producer may choose to sell animals to the market earlier and at a lower weight, which impacts the value on both nearby and back-month cattle contracts. The size and health of the herd is also sensitive to weather. Unusually hot or cold weather slows the rate at which cattle gain weight, which in turn reduces their finished size. Drought can also have a significant impact on pasture conditions, which can drive marketing decisions for producers. Therefore, as with other agricultural products, cattle volumes and prices can be seasonal. Market participants will stay attuned to not only these production factors, but also to breaking news and changes to market structure in the cattle industry. For example, a news report on health-related issues could impact global supply and demand patterns for some time to come. Given the wide array of factors that can influence prices along the supply chain, CME Group's global benchmarks are available for participants to help manage their risk in the evolving cattle industry.
Yeah, man, that's new information to me. So pretty much cows, the feed, the live cattle market is dependent on the corn market. So if corn isn't doing well, the cattle isn't going to do well. So yeah, you can trade cattle if it's two different cattle contracts, live cattle, feeder cattle. So I'm not into that. Maybe I need to do a little bit more research on cattle. But if I was to trade it, looking at the live cattle market right here, this is the live cattle market. It's currently at a discount. They shorted it down, so I'm assuming. I don't know. I got to watch that video again. It was pretty. It's a lot of moving components because this is a commodity. This right here has more real market impact than the NASDAQ, these inflated markets, right? So these are more depending on supply and demand for real. You know, they grow the cattle, the feeder cattle, they grow them, they get them real, they swell them up by feeding them, and then they put them on the live cattle market, and then they slaughter them, bring them to you, the people that like to eat beef. You know what I'm saying? So this all makes me think, though. This all makes me think, bro. Where's the human cattle market? Do they, you know, I'm just thinking that there gotta be a human cattle market, because look how they play games with us. You know what I'm saying? Look how they playing. If the price of oil goes up, people are gonna die. Literally, you know what I'm saying? Price of oil goes up, somebody out there is not gonna be able to put food on their table, and people are gonna get sick and die. So it just makes me think, like, they play the same games how they play with cattle. They're doing it with us, but those markets aren't public. This thing, they got a market out there that's trading with, if you got a social security number, we probably on somebody's market. Yeah, man, we're probably on somebody's market. That's just how I think. You know what I'm saying? Like, I believe that us humans are being traded on some type of stock market. They just can't reveal that to us. And that's just how life been feeling lately. Like, yeah, man, they playing games with us, man. They playing games with us. But yeah, man, y'all got any questions, man? Anything y'all want to go over before I get up out of here? I've been live for a few hours. Just touched a few things. I think I hit a few key points. I can run through some of this X content right quick. Then I'm gonna get up out of here. Let's see. What can I play through? I went through the airport stuff. What else did I see? It's a lot of stuff out there, man. It's just hard to filter through. What's relevant? Yeah, man, a lot of the same stuff. I'm sure sometime overnight going into the morning, I think we'll start seeing some more news come out. A lot more things being revealed. Probably things are being revealed right now. So, but just expect going into tomorrow, right? Higher gas prices. High gas. What y'all think about this soldier, right? For y'all that served in the military, right? This soldier right here completed the arm, quit. She quit 19 years in, right? 1 year before full retirement. You know, she quit. She couldn't take it no more. They going to Iran, and she was like, I'm done with this shit. 19 years in. And you know, if you get your 20 years, you get the full benefits of being in the military. But she couldn't go all the way through. 1 more year. So what y'all think about that? Let me play this video right quick.
Years I've spent in the Army, and I have made the decision to get out. And I hear a lot of, well, it's just 1 more year. Oh, you're crazy to be missing out on all that money. But people don't know what I've been through. I deployed to Afghanistan about 8 years ago. And coming home since then, I've stuck it out. And finally, the trauma from that has caught up with me. And I have stayed so long in a system that literally broke me. Yes, I've had really good times, but the one bad time holds so much weight that I can't do it anymore. I don't have any more left in me. And today I just learned that the reason I'm getting out is the same reason so many other people have voluntarily separated from the military. So being a part of something that has caused me so much trauma, it's been really difficult. But I'm done. I'm done. I can finally take this off. I'm free. I'm gonna go get my septum pierced now.
Okay. Lenny, you say oil's going crazy? Let me peek at it right quick. Peek at it. Oh, yeah. Oh, my God, bro. Oh, my God. $117 in a short period of time, bro. It's going up. Yep. $200 oil inbound. So, yeah, man. How many of y'all got to commute tomorrow to work? I'm going to ask y'all this. How many times y'all got to fill up per week just to go to work? You know what I'm saying? Y'all going to have to demand, your employer going to have to demand a fucking, you need me to come here? I'm going to need a pay increase. If you got to commute to work, you're going to need a raise until something, you know, we can agree. Look, we can agree to a pay increase until the prices go down of oil. And when it comes down, I agree to go back to where I was. Right? We're going to have to agree to something, man. Something got to cut. $117 of oil. Yeah, man. Everything. It's happening fast, bro. It's happening fast. So what I'm thinking is a lot of sentiment, a lot of people going to want to jump in as traders. A lot of people going to want to jump into this market, and they're going to be foolish. They're going to get skinned alive. Everybody's going to be talking about, oh, I trade oil, this and nah. If you wasn't in at discount, let me show you on the monthly, right? Let's show on the monthly, the current range, the dealing range for oil. So if I take a Fibonacci from this swing low down here, and that was back in 2020, up to that swing high right there, 2022. That's the range we was in, right there. So if you wasn't in this a few weeks ago, let me do this. Dealing range. It dropped down, right? Look, check this out. It dropped down to discount. Below equilibrium. Below equilibrium is discount. Above it is premium. So just a few weeks ago, right? It dropped down. We can go back to September last year. But let's go down to a daily. Just a few, man, that's crazy. Look at that price action, parabolic. But just a few weeks ago, right? Or a few months ago, December. Back in December during the holidays, it traded down inside of the discount side of the range. Look over to the left. Sweeps liquidity. Right there. Inside of discount of the dealing range. It's not random. Takes out the liquidity. They already had orders in here. So I'm telling y'all, they knew back in December, or probably longer than that, but they knew in December it was time to put their orders in and it's time to go. So they drop it down to discount in December, took out these lows. They got it at $55 a barrel. So they put their orders in around $55 a barrel. And then from $55 a barrel, they send it higher just like that. Y'all think that's random? Nah. And then look how they gap it open. These people are sick. You know why? Because it's like, they greedy as hell, because it's like they rig it for themselves just to brag on themselves that they can do this. That's how I think. They rig these markets for themselves just to brag on themselves that, hey, look what we did. They buy it down here at $55 a barrel, and then they send it up to $117 a barrel. Remote work is coming back. Hell yeah. Real fast. Yep. Daryl. Up 30% at the opening. Yep. Let me see. AWB. The oil spike is like 9:30 a.m. Yep. It's crazy, man. Samuel. The U.S. is sending 3 carriers into the strait to aid in tanker transport. that might not go over well. No, it's not gonna go over well. I thought they mine. I thought there was ocean mines in that strait. I thought they layered them with oceans, and they're gonna put this is what they're gonna do. If they end up doing that, they're gonna open themselves up for attack, and that's just gonna be more justification to go into Iran, boots on the ground, and more attacks. So why even do that, man? Why even do? We gonna cause this problem, and then we gonna aid ships. We still trying to conduct business in the war zone. That does not make sense. They still trying to conduct business in the war zone. Come on, man. And if I'm a tanker, right? If I got a ship tanker or a company that got tankers, why the hell would I want to send my pieces of equipment and my employees in harm's way? If I'm a ship captain, why would I even agree? Why would I even agree to be like, hey, yeah, let's go ahead and keep going to Iran or where we going? Hell nah. If the UAE and all those Gulf states are getting bombed, why would I agree to still move supplies and oil to that part of the country or out of that part of the world? So yeah, it's not gonna weigh over well, man. Jay Manson, we need to get on the right team. Samuel, yeah, it's high risk. Yep, I agree with you, Samuel. It's definitely high risk. AWB, yeah, here are mines escalating coming. Let me see. Let's see if there's any live updates. Iran oil, U.S. oil. Iran strikes U.S. oil tanker. That was a day ago. I don't. Some of this stuff you got to filter through. U.S. sends what I'm about to say. Filter today. No real update yet, so I'm gonna wait on that one. But yeah, I definitely agree with y'all, man. That's definitely gonna escalate the situation, which that's what they want, man. That's what they want. Yeah, man, that's insane though, man. By the time I wake up, it's probably gonna keep going. It's going for that high up there, but it just traded inside of a weekly SIBI that I have highlighted. Do y'all think that's random? Why isn't it just keep going? That's because it's finding resistance at this level right here. And yeah, man, y'all get ready. Get ready. Once we blow through that high, let's come out to the monthly. Once we blow through that high, right, this is a monthly time frame. I can see it coming up. Let me hide that right there. Coming up and going for this high right here back in 2001. Wouldn't that be something? I mean, 2008. Coming for levels back in 2008. And they did it in a span of 2 weeks so far. Yeah, man. So when y'all wake up in the morning, y'all gonna see these headlines. We're already watching it live. They're not talking about it now because the news only runs on certain cycles. But right now, we witnessing history right now as oil rallies, and this is not good for the economy. This is not good. So I'm expecting. Let's come back over to the NASDAQ. Yep. Still look. Remember I took the trade earlier. Took the trade. What is it reaching for? What is it reaching for? What is it reaching for? This volume imbalance. You remember I highlighted that earlier? It looks like it wants to trade down there and get to it. Oil spiking higher. NASDAQ coming down lower. What is the dollar doing? Let me pull up the dollar. What you look at that? Look at the dollar. Very bullish. Very bullish on the dollar. It's going higher. Very bullish. So what I want to see what the dollar is. Strong dollar. So that's a risk on environment. Y'all get ready. Excuse me. Y'all get ready for crypto, y'all. It's coming down. We see this dollar flying like this. We see oil going higher. We can start seeing a risk off environment for the stock market. We can see a risk off environment for crypto. So I hope y'all get ready. Getting ready. So yeah, that's the level that I want to see the dollar reach for. This high up there, that's buy side liquidity. And I think it's going to go tap that. Let's say we get up into that. I mean, this dollar can get strong, yo. This dollar can go higher. So if we get up into that high, then we're probably going to want to come up to that high right there. That's around 101 for the dollar. It's currently at 99. So yeah, man. And whenever you see the dollar going higher, right? When the dollar goes higher, the money printers are on. They're printing money. They got to print money for the war, right? They got to print money for the war. So what does that do to the economy? Inflation, right? Inflation, printing money, funding the war, taxing the people. Because look, you're going to be feeling it at the pump. We're getting taxed everywhere. You're going to get taxed at the grocery store. You're going to get taxed at the pumps. You know what I'm saying? You're going to get taxed for everything. You're going to get taxed for everything. Just know it. Food. So they're going to be hitting y'all pockets in hard times. And then is it ironic that the job market laying off almost 100,000 people or 100,000 jobs being laid off? So it's not looking good out here. So with that mindset, I'm going to lock in on one market, which is this NASDAQ, and it's clear as day where it wants to go, right? It wants to go short. So those are opportunities in the chaos. So that's what I'm trying to help y'all figure out. There's opportunities in the chaos. So what if you're going to learn this skill set, plenty of opportunity to profit, plenty of opportunity to profit from conflict. Sounds fucked up, right? But that's the way of the world. That's what I'm teaching. Samuel, nothing is holding back a bull rally for the next 3 weeks. Nobody is shorting oil right now. No. And when you say bull rally, are you talking about like what you talking about? A rally and what? Things about to come down. Things about to come down. So yep, oil, the dollar strong, oil strong. Let's look at crypto. I already looked at Bitcoin earlier, but I think it's setting the stage to roll out the bed. Okay, Samuel, you talking about oil? Yeah, there's nothing holding that back, man. That's gone. And they was already in. They was already positioned. I already showed you how they was already positioned in it. They've been positioned since December. Ethereum coming down. A lot of sell side underneath the lows right here. Ethereum, a lot of sell side liquidity below the market. Oh my God. Ethereum under $1,000. Ethereum going to 882. That is crazy, bro. Coming off almost $5,000, back down to fucking $880 something. Watch it play out. If you see me trade earlier, if you see me put on that trade earlier, I mean, I ain't gonna say I don't miss, because I miss, but you could see, you know, the level of skill that I'm showing you. You can see it. XRP, at least at minimum 111. But if we keep blasting through that, like I mentioned it before, potential down here, potential 48 cents. You know what I'm saying? So some of y'all might need to make a decision. I'm not telling you what to do. I'm just saying, like, you might have to make a decision on where you're going to allocate your money to. Right now, the dollar is the safe haven. Job market, and then look what we got coming up in a few weeks. Let me see. Federal funds rate. When we got that? When we got the Fed meeting? When's the Fed meeting? It's the last week. Thought we had a Fed meeting coming up. Yeah, next week. Next Wednesday, 2:00. Interest rates announcements. So that's going to be interesting. So we got conflict. I think it's going to get worse by the time we get to next week. And then what is the Fed going to say? What is Jerome Powell? Jerome Powell about to piss everybody off. Jerome Powell about to piss everybody off, especially in this conflict right now. So it's about, you know, it's about to get crazy. You think Bitcoin already hit its floor? Check the Dow futures. I already looked at Dow, but we'll look at it again. Where did it go? I had it pulled up. Let me pull it up again. So Dow coming down. Look at that. Dow slipping real fast. Dow might be falling faster than both of them, but Dow's falling down. Yeah, man. Yeah, man. We anticipated this. Sell side liquidity right there. Dow Jones, about 45,000. That's my level of interest for the Dow. $45,000. If it goes crazier, let's say the Dow gets crazier, then I could see possibly in here around 43,000. Oh man, oil is going 118. 118. Let's go down to a 1 minute. Yep, still rallying. Just took out some liquidity right there on the 1 minute. So it could come down again, but still bullish. $200 barrel oil coming, man. $200 barrel oil. But definitely coming up near term. I want to see it come up, take out these highs around 130. We could get oiled at 130. They're probably going to do it this week, if not tonight. And then after 130, we're going to see about 150-ish. And then after that, I'll reassess and see what they want to do. But damn, it's 119. Oil is flying. So how many of y'all got to commute to work in the morning? AWB, yeah. That's a huge move in oil on the weekend. The upstream companies will be throwing a party now. I could see a $200 barrel oil by Friday. I'm not going to say by Friday unless shit gets real. If we start seeing escalation and stuff getting worse, like if we do go, check it out. Somebody mentioned about the carriers. I think that was you. But if we got these war carriers escorting tankers in the Strait of Hormuz, and one of those tankers get blown up or something happens with one of those carriers, then oil is going to keep going. So yeah, we could see it. So we going to see. Uber going to rise. Shit, Uber going to go out of business unless you got an EV. The Uber driver's going to be complaining that it ain't going to be worth driving people around because the fucking gas too high. You're not even covering costs for your maintenance in your vehicle. So Uber drivers going to go out of business. It's going to look, you thought Uber was safe. No, this shit about to hit everything. This shit about to hit everything. So yeah, man. Let me look at natural gas right quick. Now I'm gonna get up out of here. I want to see natural gas, see if that's being impacted. I don't even know the ticker for gas. Somebody tell me the ticker for gas. I had it pulled up. Markets, energy, crude oil. NG. Okay, NG for natural gas. NG. NG. Natural gas. Look at that. Natural gas starting to spike up. On a daily time frame. It dropped down, right? Dropped down. Took out some liquidity over here. Highlight this low. So all energy is about to spike. All energy. God damn it. It didn't take out that low right there, but it did reverse. And now it's starting to spike higher, just like oil, spiking up. So natural gas prices going up. So yeah. It's getting crazy. You talking about liquefied natural gas. We got natural gas and we got LG, liquefied natural gas. LNG, let's go look at it. Gulf Coast LNG futures. And where's the chart at? Let me pull it up. What's the current contract? I don't know the current contract on it. It goes all the way out to May. So I'm not gonna worry about it right now. But LNG is liquefied natural gas, and then NG is natural gas. But yeah, man, that's gonna be it, man. Y'all stay vigilant. You know what I'm saying? I'm not gonna hold y'all too much longer. I definitely appreciate y'all watching. Man, pray for the world, man. We got some hard times ahead. Definitely learn this skill set. I left my link in the bio. If y'all want to join the Patreon and the Discord, I left my link in the bio so y'all can sign up for that. I go more in depth in this. I go way more in depth in trading. It's way more than what I showed you today. So, I didn't really get into too much. You did see me do a live trade. So if you missed it, go back and watch the live demo trade that I did. I show you different concepts. We definitely trying to make money in these markets as turmoil. That's why we watch them, so we can profit in these markets. See what retail is doing. A lot of retail, they're sitting back just amazed by it, and they're reacting to the markets. But we are anticipating the moves in the markets. So whatever your market you're looking at, you want to be able to anticipate what's going to happen next. Where is it going to go next, right? And that's how you get in line with making money with these markets. You don't want to be reactionary like everybody else. Everybody else is reacting to the markets, but we are anticipating the markets. We're waiting for a setup that will allow us the opportunity to take advantage of the market movement and profit from it. So that's what we do as traders. So if you want to learn more about that, y'all hit that link, sign up to the Discord, get in the Patreon, right? In the meantime, I appreciate y'all joining. And yeah, hopefully you learned something. Click the like button, share the video. I'll catch y'all on the next one. Y'all in the Discord. I'll catch up with y'all in the Discord. Peace out.